This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast. Tom Keene, he is out today on assignment. Some secret assignment, I believe. But not to worry, Alex Steele coming in early. Thank you, Alex.
So excited.
Exactly. Coming in the power chair. Alex Steele here talking to us for the next 3 hours. A lot of stuff going on today. Obviously, we're going to have live reporting coming up throughout the morning. Kaylee Lyons, Bloomberg Television, she's in Baltimore. Give us the latest on what is happening there. We got some smart market guests here, just kicking off the hour big time. We're going to have Margie Patel. We're going to have Quincy Crosby. Very strong market guests. Give us a sense of where we're going here on this markets, where this Federal Reserve is going to take us. And speaking of the Federal Reserve, Rich Cloward, a former vice chair of the Federal Reserve, he's going to join us to give us a sense of where he thinks this Federal Reserve is going to take us over the coming weeks and months. So we've got all that coming up. A lot of smart guests giving us a sense of where we're going. The futures here looking a little bit higher. S&P, we're up about 0.4%. We'll take that here on this Wednesday morning. Let's kick this whole thing off with Lisa Mateo. Lisa, what do you have for us?
You got it. Futures, right now they're advancing. This is after ending lower in Tuesday trading. The S&P 500, though, still having a good run. It's set for its fifth month of straight gains. Still the move this week's a little bit modest ahead of Friday's release of the Federal Reserve's preferred inflation gauge. So right now we have NASDAQ, Dow, and S&P futures all up about 0.4%. The 2-year yield at 4.59%, that is little changed. The 10-year yield at 4.23%, and that is little changed as well. Over to commodities, we have spot gold higher at $2,195 an ounce. And over to oil, NYMEX crude $81 a barrel. We have Brent crude at $86 a barrel. To earnings we go. We'll start with Swedish fashion retailer H&M. ADRs up more than 1%. It posted better than expected operating profit. Its spring collection actually pushed sales higher in February. And then we have GameStop. On the flip side, they are down 18%. Adjusted earnings per share, net sales for the fourth quarter missed the average estimates. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Steele sitting in for Tom Keene here this morning. Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, and we're also streaming live on YouTube. Head over to youtube.com and search Bloomberg Podcast. We're also in your dashboard. How about that? Apple CarPlay, Android Radio, right there. All the functionality you could ever want. Right now, the story, Alex, still continues to be kind of the developments here in Baltimore. Kaylee Lyons is on the scene. She's in Baltimore right now. Kaylee joins us. Kaylee, what's the latest that we know from the site this morning?
Well, Paul, we're about an hour into what is now a recovery effort. 6 unaccounted for individuals, still members of a construction crew that were present on the Key Bridge at the time that the dolly collided with it and it subsequently collapsed. The search and rescue mission was called off around 7:30 p.m. Eastern last night. It now is that these 6 individuals are presumed dead, but they are trying through this recovery effort to actually retrieve their bodies to provide some closure for their families and all of those who have been affected by this. So that is what is underway on the ground right now. And we also do expect that later today, the National Transportation Safety Board will actually board the vessel. They did not do so yesterday as they did not want to interfere with the ongoing search and rescue operation that was paramount yesterday, but they may actually board and begin their investigation today. It's a 24-member team that is going to be looking at the technology on board, any recorders, and starting to try to do the work of just understanding what exactly happened with this crash, how those on the actual ship were involved, their conduct, the owner, operator, any role they would have played in this, and they'll start to do that investigative work, and we do expect that will begin later today as well.
And Kayla, you spoke yesterday to Senator Cardin after a press conference. We saw a Secretary of Transport, Pete Buttigieg, was also there. President Biden had spoken about how the U.S. federal government is going to come in and pay for it. Where are we in that part of the conversation?
Well, what we heard resoundingly yesterday from Governor Moore, from Secretary Buttigieg, from the senators themselves was that yesterday it really was about the human beings. It was about these 6 souls that still were unaccounted for, and that was really their primary focus. All of that is in relation to funding the actual clearing of the waterway here, trying to get the debris out, get the ship itself, the dolly, out of the harbor so that the port of Baltimore can be open once again, and then of course reconstruction of the bridge. All of that is longer term, and all of these officials described it as so. Wes Moore was talking about how this will be a slow process. Secretary Buttigieg said this will not be quick or easy. He also said it will not be inexpensive. And the senators as well, all of them just really reluctant to put any kind of timeline as to how long it will take to get the transit flows through the waterway open again, or frankly, how much longer it will be that ground traffic has to be diverted, as this section of I-95 is obviously not drivable and will not be for the foreseeable future.
Kaylee, I think we've now all seen the video images of this bridge and on top of this vessel here. Is there any sense of to when that process will begin to kind of disentangle the bridge remains from this ship and again, as you suggest, maybe try to get the ship out and maybe get the harbor open?
It's really not clear at this time, Paul, what that timetable is. And frankly, because there is still so much debris in the water, that is one of the things that have complicated the search and rescue effort that is now a recovery effort, as that is big items that divers are essentially having to work around. So it could be a very lengthy period of time to get the vessel out, to get all the shipping containers that had fallen off sorted. There's been reporting that some of those containers may contain hazardous material, and investigation and work may have to be done into that. And then, of course, the clearing of the actual debris itself, because they do want to make sure that this channel is safe for operation when it does reopen. And it's worth keeping in mind there are a number of vessels that are inside Baltimore Harbor right now that are unable to get out, just as other vessels are not able to get in at this time. So the trade flows here, imports and exports, are really stagnant, and there is just no clear time frame under which that might change, Paul.
All right, Kaylee Lines. Yep, thank you so much, Kaylee Lines. Thank you much, Bloomberg Television host reporting live from Baltimore.
Yeah, and then to this point, Bloomberg Economics had a note out that said, look, this could disrupt auto prices in that maybe it stops disinflation. Not that we get an inflationary outcome, but it stops the disinflationary, and that could actually affect the Fed. So let's get to it with Quincy Crosby, Chief Global Strategist with LPL Financial. Quincy, what do you make of that call? That it's not that what we saw with the bridge will be inflationary, but that there's a possibility that it will stop disinflation.
Well, it's interesting because take a look at the share prices of the auto manufacturers. They're up this morning because they've come out and said that they can get the vehicles to the showrooms on time. So perhaps the upfront proactive move by the manufacturers is obviously helping at this point the share prices. It has to continue, but I do agree, and the reason is that Americans are buying vehicles. We took a look in February. Americans were buying cars, and it looks as if they want to continue buying cars, particularly if the interest rates start to ease a bit. For those buying, with the loan.
Quincy, let's step back here a little bit here. It seems like we've had the central banks really over the last week and a half kind of soften their tone a little bit. I think the market's kind of believing that the central banks, particularly the Federal Reserve, is a little bit more dovish than maybe we had thought a week or two ago, given some of that inflation data. How do you think about the central banks? How do you think about the impact on these markets right here?
Well, it's extremely important because the surge in the market was underpinned by a couple of things. One is that the Treasury market funding was not as heavy as initially thought. The Fed has a dovish pivot. And then all of these interest rate cuts, a series of them that actually they believe was going to start in March. If you go back, it was almost a 90% chance of a rate cut in March. And then, of course, that evaporated very quickly. The question now is the Fed going to give us any rate cuts, for example, in June? I took a look at the probability, Fed funds probability. It's actually easing a little bit. So is July. And this is, I think, going to be a problem for the market because you have to substitute something else if we're not going to get the rate cuts. And that is going to have to be corporate profits. It looks as if corporate profits are going to hold up. And more importantly, that the operating margins are going to be healthy. That's key, because if you don't have that, you've got to ask yourself, what then supports these valuations? It's going to be difficult for the market to assimilate and continue to climb higher, especially without a pullback, a meaningful, comfortable consolidation.
Yeah, but Quincy, I've been hearing that for a while. And it feels like the difference is we are finally seeing some kind of a rotation with materials, industrials, and energy. Small caps try to get a bid. I mean, when does that moment happen?
Well, we're going to start the earnings season mid-April. Well, that's going to be very important. But again, the market will pull back. I mean, it always does. It's not if, but when. This has been unusual in that every time we thought the market would really begin a meaningful consolidation, something comes along to save it. And then we go back to it. Now, what will happen, however, is when we do have one, and we will, then the bears come out and start saying, well, this is deeper than we thought. This is going to lead to a complete bear market. It invariably happens. But nonetheless, you're right. I mean, and take a look at the leadership, actually, that we had in the green on the large cap. It was utilities and it was consumer staples. That's fairly, what shall I say, right, bearish, actually. And if we continue to see that, that's the market telling us, watch right out, we're moving into a bearish period. The market always looks ahead. But you're right, small and mid cap have done well, even on days when the larger indexes were in the red.
Yep.
Small and mid cap have done well, and that's a very good sign for the market.
All right, Quincy, thank you so much for joining us. Always appreciate getting your thoughts. Quincy Crosby, Chief Global Strategist, LPL Financial, with our news in New York City. Here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. It's now a recovery mission for the 6 missing construction workers after the bridge collapse in Baltimore. More from Bloomberg's Dan Schwartzman.
The search for survivors at the Francis Scott Key Bridge collapse site in Baltimore, Maryland was suspended overnight, with the 6 people missing deemed to be deceased. The 6 were construction workers from a business called Bronner Builders and were doing repair work on the bridge. Coast Guard Rear Admiral Shannon Gilreath explains why the operation was transitioning to a new phase.
Based on the length of time that we've gone in this search, the extensive search efforts that we've put into it, the water temperature, that at this point, we do not believe that we're going to find any of these individuals still alive.
That's Coast Guard Rear Admiral Shannon Gilreath. The search for the missing is resuming this morning. Dan Schwartzman, Bloomberg Radio.
Lawmakers in Thailand's lower house of parliament have overwhelmingly approved a marriage equality bill that would make the country the first in Southeast Asia to legalize equal rights for marriage partners of any gender. It would open up access to full legal, financial, and medical rights for LGBTQ plus couples. This would make Thailand the first country or region in Southeast Asia to pass such a law, and the third in Asia after Taiwan and Nepal. The bill now heads to the upper house Senate. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. Alex, I'm looking at the Japanese yen in something Tom Keene would call out here.
I was literally going to say the exact same thing. This was going to be ripping up the script moment. Dollar yen, 152. Everybody drop your something.
I mean, it slid to the weakest level in about 34 years versus, and I thought the Japanese central bank is raising rates. Why is the yen?
Because that differential. So they raised like a touch and we're going to hike, and that yield differential is still going to be completely blown out. How do you get strength unless they actually go in and buy it? I don't know.
151.11. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
This Bloomberg Business Flash is brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing. Call an Oppenheimer professional today. All right, we've got green on the screen. We have the NASDAQ, Dow, and S&P futures all up about 0.4% right now. The yield on the 2-year at 4.58%. That is little change. The 10-year yield at 4.23%, and that is little change. To commodities, we have the dollar weaker, Japanese yen, euro, British pound stronger. On a side note, the yen touched its lowest level versus dollar since 1990. Have to point out Bitcoin too at 70,173. Companies making news. We'll start with Merck. They're up 4% right now. Its treatment for this rare and dangerous form of high blood pressure. It won approval from the U.S. Food and Drug Administration. And Johnson & Johnson, they're up about 0.5% right now. Wall Street Journal report that it's in talks to acquire medical device maker Shockwave Medical. And finally, Trump Media and Technology Group. They're up about 9% right now. The stock rallied 16% in its first trading day as a public company yesterday. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate it. Alex Steele sitting in for Tom Keene. I think Tom might be up in Canada, so I'm thinking there's a Toronto Maple Leafs game last night that might have been on his schedule.
Yeah, but I think it's a work thing because he shaved his beard, right?
He shaved his beard.
I don't know if he shaved it.
Thankfully, he shaved his beard.
So I don't know, those of you on radio, when he comes back from vacay, he gets this beard, which, causes a lot of conversation here in headquarters.
It does. I mean, I just picture him last week sitting at a cafe in Paris, just, sipping a Beaujolais or something like that.
But does he wear the bow tie?
Does he wear the bow? That is the great question.
No one knows.
And we have no confirmation of that.
I don't think he wears it.
You don't think so?
I'm putting it out there. I don't think he wears it.
Okay, that's big.
It's a big call. This is the biggest call, actually.
All right, let's go to Margie Patel. She is the Senior Portfolio Manager, Allspring Global Investments. Margie, thanks so much for joining us here. I've got a market that on the S&P 500 is up, kind of 10% this year. We had this big move off of the October lows of last year. What do I do here? Do I jump into this market? Do I just stick with my 2-year Treasury at 4.6%? What do I do here?
Oh, looks like we have audio issues there.
Yeah, we might have some audio issues.
We'll get her back. We'll get her back.
We'll get her back. But, the question is, after the year you had, you sit there, you look at the 2-year 4.6%, you got the 10-year at 4.2%. You can sit there in treasuries, maybe take a little credit risk and get some good mid-high single-digit returns. The question is kind of what do you do here? So Margie Patel joins us again, Senior Portfolio Manager, Allspring Global Investments. Margie, what are you telling your clients these days with this market?
Well, I think the main thing is to say the economy's in great shape, and it looks as if it's actually on the verge of slightly reaccelerating. A number of other countries in the world also look as if they're modestly accelerating. So that says you have to really stick with equities and, look for the best sectors and the best companies and not be scared off by another recession scare.
So if, though, the scenario that you just set up, Margie, means that the Fed maybe won't cut, does that then weirdly disrupt the bullish scenario you just laid out?
Well, I think when you looked at the economy, you've looked at corporate profits now for over 2 years, and there are very few companies that have actually been sensitive to the changes in the Federal Reserve. Profit margins weren't squeezed when the Fed raised short rates by 5 percentage points. And I think if they cut by a quarter or don't cut by a quarter or half, whatever, I won't say the economy is impervious to it, but I think that the whole economy is much less sensitive to changes on the part of Federal Reserve policy. I think that's why the Fed's a little flummoxed, because their actions don't really seem to have the effects in the real economy that they thought they would see.
All right, so given that backdrop, Margie, are there certain sectors that you think are attractive here? Of course, Alex Steele's been long the Magnificent Seven all along, so she's just clipping coupons here. But how about the rest of us who maybe are still looking for some opportunities?
Well, I think if you look at what companies have sustainable growth, and that still is technology, that still is some of the very largest tech firms. I think they still have their momentum in place, and they'll continue to be winners. I think that we see a number of companies in the industrial space that are benefiting from higher capital expenditures, from reshoring. what just happened in Baltimore is, I think, one more straw on the camel's back that says companies may be rethinking having overseas operations and bringing more production home. And we also have a lot of capital expenditures for the whole economy to improve the power grid, to improve infrastructure. And I think those two will also help to keep the economy going in the industrial space. We think in healthcare it's mixed, but we think some companies have gotten through COVID, aren't too dependent on China for sales, and they should also do well if they can continue to think up new products that will benefit the healthcare system.
I love that you brought up the industrial story and all the public money kind of flowing in. The getting private capital in has been increasingly difficult, and sort of squaring that gap, I don't know, sure. Filling that hole can be very tricky. Plus, companies that seem to have order books, they're not booking the revenue. Like, it's not as fast as we think it is. How do you play something like that? You're in like a structural shift, but still in a cyclical sector.
Yes, well, that's right. Because I think companies aren't just madly spending money on hope they'll get a return. I think they're being very prudent in where they make capital expenditures. And it's not the whole economy. It's particularly those sectors that we all were able to get a good return. Again, such as technology, certain parts of the power market. It looks as if suddenly people realize that the whole economy is rather short on power to run the economy. And and also in the energy space, I think we've seen them be pretty disciplined on capital expenditures, but I think we'll continue to see energy capex. And so for those sectors that need capex that can justify good return, I think we'll continue to see capital expenditures.
And Paul, to this point, do you know what the third best performing stock in the S&P is this quarter?
No.
Constellation Energy. It is a power company behind Supermicro and NVIDIA.
I like that.
Up 58%.
You are all over this theme, that is for sure. Hey, Margaret, we've had the stock market rally 25% off of those late October lows here. Do I have to start calling into question valuation in this market?
Well, it's hard to say how do you value something. Typically, people look at, say, the price-earnings ratio compared to, say, the 10-year treasuries or something like that for whether something's overvalued or undervalued. But I think two things. I think that there's really no connection of the stock price and its price-earnings ratio. It really comes down to investor expectations of future earnings. And secondly, if you look at, say, the average price-earnings ratio or dividend yield to treasuries, I think you may be taken a little off course because I think that with so much treasury supply, we're likely to see treasury yields be somewhat higher than we might have thought for where inflation is, where the growth of the economy is. So that's why I think it's better to just look for companies that have sustainable earnings and say, let the market figure out if it should be a PE of 25 or 30 or 35, and just buy where we see sustainable growth.
Margie, before I let you go, we need to channel Tom Keene, because he probably would have led with this anyway. Dollar yen, 151.09. What is the trade here?
Well, we all have our biases. I think U.S. is best. I continue to see U.S.-based companies that have tremendous growth opportunities that really are greater than what I see in other parts of the world. So I really couldn't comment on Japan. I'm glad to see they're creeping into positive interest rate territory. I think it's a great country, a very terrific economy, but I think U.S. has just as many opportunities, so I'll stick with the U.S.
All right, Margie, thank you so much for joining us. As always, Margie Patel, Senior Portfolio Manager, Allspring Global Investments. Appreciate that. So, Alex, looking at the market here, we got a little bit of a lift here to the market. It just feels like the market is kind of being driven here by just this sense that the Fed, on balance, is still biased towards lower rates going forward. The question is, I guess, when do we start? Is it June? Or maybe July, something along those lines.
Well, also, I think my question going forward is we kind of wrap up this quarter. What's going to really move the needle higher? Are we going to see sort of any sort of selling by default if you kind of lock in those gains? Typically, April isn't a great month for equities. And remember, the S&P just saw its biggest quarterly gain since December of 2023. And it's like 14% above its 200-day moving average. It's just really overextended, is my point.
I meant to check in with Abigail Doolittle. She's really good on the markets and kind of where we are and how the charts look. She likes the lines. She likes the charts, and maybe we'll get her in there soon. Get a sense. Are we overbought here? I look at the S&P 500 RSI relative strength index to see where that looks these days. S&P 500 We are up 0.4% here on the futures market. More to come. This is the Bloomberg. All right.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are advancing right now. NASDAQ, Dow, and S&P futures all up about 0.4%. The 2-year yield at 4.58%. That's little change. The 10-year yield at 4.22%, and that is little changed. Over to commodities, spot gold higher at $2,196 an ounce, and over to oil, we have Brent crude at $86 a barrel. To earnings we go. Swedish fashion retailer H&M, say that 3 times fast. ADR's up more than 1% right now. It posted a better than expected operating profit. And then we go to GameStop. They're down 17%. It reported adjusted earnings per share and net sales for the fourth quarter that missed estimates. Today we're also waiting results from Carnival, Cintas, and Jeffries. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Steele sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com and search Bloomberg podcast. We're also in your dashboard as well. Apple CarPlay, Android Radio, all the cool functionality right there in your dashboard. So there's no excuse for not getting this programming. Right now, let's head back down to Baltimore, Maryland. The images we're seeing on the screen, it seems like they're going to be similar images for a long time. That is a ship stuck in the river there, bridge collapse on top of the ship. The question is kind of how do they move forward down there? Kaylee Lines is in Baltimore as we speak at the scene. Kaylee, what are you hearing from people here? I know we're still very much in the mode of looking for those souls that fell into the river. Where are we on that process at the moment?
Well, we're about an hour and a half right now, Paul, into what is a recovery effort. They stopped the search and rescue effort around 7:30 p.m. last night, saying that these individuals are presumed to be dead, just given the temperature of the water, which of course is in the 40s, and the length of time since it has been since they initially fell in when the bridge was collapsed. So now this is a recovery effort. They weren't undergoing any operations overnight, given the hazards it could mean for these divers, for these individuals involved in this effort, with the murkiness of the water, the debris that is in the water. So they're slowly beginning the recovery process now. And we also expect that later today, the NTSB likely will board the vessel to begin their investigative work into what exactly happened with this crash. But really what we're seeing here today is just the first steps in what is likely to be a very lengthy process, not just lengthy recovery and investigative process, but also, of course, once those things are complete or at least more underway, you actually have to get enough debris off the ship to be able to get that vessel out of this waterway and then clean everything up, get all of the debris that is currently submerged under the water out so that it is safe for ships to transit this river once again.
And Kaylee, what is the time frame for all of this? You know, I was looking at the map on Bloomberg Terminal. If you have a terminal, there's a great function that you can check out maps and look at different vessels. And there's still lots of vessels now that are stuck, and they're carrying things like really heavy oil. They'll bulk carriers, like they carry a lot of stuff. What do we think happens there?
Well, either those cargoes, whether they're cargoes coming in, they can still be offloaded in the port and then shipped elsewhere via ground transit. But for the actual ships, they aren't going to be able to get out for some time. And of course, the ships that were attempting to get into this harbor when this happened, they are not going to be able to do so. And we're likely to see all of those cargoes diverted elsewhere, likely along the East Coast up to the north, New York, New Jersey area, or even down south to Norfolk, Virginia. But the timetable, Alex, we have asked many authorities this over the course of the last 24 hours. And frankly, no one is willing to put a firm timetable of anything. It's just too uncertain at this time, it seems, to give estimates. Governor Wes Moore would not give a real estimate yesterday. Secretary of Transportation Pete Buttigieg, who was here on the scene, all he said really was that this will not be a quick process. And I asked both senators from Maryland, Ben Cardin and Chris Van Hollen, yesterday about what they thought about the timeline. And they essentially told me, to paraphrase, that it's just too uncertain.
Kaylee, finally, what do we know about the crew of the ship? Where are they? Are they still on board? Have they been debriefed? What do we know about the crew?
There wasn't much known about the crew by authorities yesterday because it was really primarily focused on the search and rescue effort. We have heard through reporting that no one on the actual ship itself was killed or injured seriously in any way. What we also do know is that because of the laws here in Maryland, the individual piloting the actual vessel at the time this crash happened had to be someone specific to here in Baltimore, to the state of Maryland, to actually get the vessel out of this waterway. So that is likely to be part of the investigative process we will see the NTSB undertake. They will, of course, be interviewing individuals that were on board at the time. It is worth keeping in mind, though, that Governor Moore and others yesterday were heralding the action of the crew in alerting, giving out the Mayday signal, alerting to the loss of power, the lack of ability to control the vessel, because that got port authorities enough time to actually close further traffic off from the bridge. We could have been talking about a much higher fatality count today if that action had not been taken. So it's likely that some lives were saved by the Mayday signaling and everybody's quick action thereafter.
Kaylee, thank you so much once again for your reporting there. Kaylee Lines, Bloomberg Television host. She is on the scene in Baltimore, and we appreciate her reporting this morning. All right, let's switch gears. Let's get back to these markets. Again, the S&P 500 is up about 0.4% here in pre-market trading. And Alex, if you go to Dallas, Texas, and you're a sell-side research analyst like I was for many years, and you're going to go see some smart people in Dallas, Texas, you know where you go to?
No, tell me.
Crescent Court.
Okay.
That is where a lot of the hedge funds, a lot of the asset management firms are. Great hotel, by the way, so you can get everything, pretty much all your business done.
It's
the
key.
Crescent Court in Dallas, Texas. And our next guest is ensconced there. Skylar Weinert, he's the Chief Investment Officer at Regan Capital. Skylar, thanks so much for joining us here. Love to get your thoughts here on these markets. As you talk to your clients, we got an S&P that's up 25% off of those October lows. We've got a 2-year Treasury that's around 4.6%. What do I do here with my money at these levels?
Yeah, stocks look like a freight train, don't they? It's hard to get off the train, and I think clients have to continue to stay invested generally in the market. We don't know when the next Nvidia or Tesla or bullet train's going to come out from the stock market. So generally stay invested. On the fixed income side, I think it's actually become a lot easier in the last 2 years to play quarterback on fixed income and really get excited about investing in credit and fixed income.
Where are you really excited, Skylar? Where are you really excited?
If you look generally at the landscape of, let's say, equity or real estate, it's a much better time to be a lender than it is an equity buyer in some of these names, in some of these industries, especially real estate, where on the loan side, you're getting 10+% coupon on loans, okay? And on the CUSIP side, on the bond side, you're getting 7, 8, 9% yield being a lender to really high quality credits. We haven't seen that in generations. So to play quarterback with advisors that we speak to, they're switching gears and they're getting really excited about being able to put their clients' money to work at mid to high single digits.
All right. So in terms of the credit markets, I agree there's some real opportunities out there. I mean, how much credit risk are you seeing your clients willing to take here? Do we stay on the investment grade? I mean, because if I look back to last year, the best performing fixed income sector was high yield, despite all the discussion about pending recessions. So how much credit risk are you suggesting your clients take these days?
Yeah, when you look at high yield and bank loans, those are fairly correlated to the equity market. So they're following the exuberance of the equity market. Corporate bonds in general, corporates in high yield, and put munis in there as well, are trading at really rich levels relative to history. We're talking about 85th to 95th percentile of richness. So there's really not much more to gain absent rates drop 2 points tomorrow.
This is like music to Paul's ears. He loves him some munis. I work really hard every Friday in our muni segment on our 10 to 12 show to stay involved and understand what's happening. He is like all in. But Skylar, isn't everyone all in on this trade at this point?
There's a really good chart on Bloomberg. It's AAA, and then there's another one. I forget the actual ticker, but you can follow the percentage that munis are trading as a percentage of treasuries. And we're hovering around 60%. So yes, it helps a tiny bit, that highest tax bracket, but for the rest of the United States, munis don't really help. So point being, munis and corporates are trading super rich. The opportunities we're seeing are in mortgage backs, where because the banks haven't been involved in 2 years, because the United States government hasn't been a buyer of mortgage bonds in 16, 17 months now, mortgage bonds have become really cheap. And that's one of the reasons why mortgages for U.S. consumers are hovering right around 7%, is because there's very little demand for agency mortgage backs at almost 6% yield and non-agency mortgage backs at upwards of 8 to 9% yield.
Skylar, what do you guys do in the private credit market? That's been a market that's just exploded really in the last dozen years or so. It's really become an asset class in and of itself. How do you get exposure there?
Well, people forget that one of the original private credits is mortgage bonds.
Yep.
Ginnie Mae started in 1968, and it for the last 100 years, mortgages have been a private credit. So we like to stick to collateral. We like to stick to real estate related investments where we can drive by the property, we can talk to the owner, We can look at their balance sheet on a daily basis to check up on them. So you're looking at the very low end, getting a 6 or 7% yield in agency credit, okay? In non-agency credit, you're looking at high singles, but then there's a tremendous opportunity right now and coming down the pipe to help out multifamily borrowers who are coming up on loan extensions or loan balloons. They don't have the equity capital to put up to refinance that debt. So they're borrowing at 14% on first lien paper, maybe second, that 50 to 70% slice second lien. You can get upwards of high teens on the loan.
Yep.
Okay. And if you're buying into that at a 65, 70 LTV, I call it loan to own, you actually have a call option on the property. So if the borrower does default, you own the property at 65 cents.
Yep.
So tremendous opportunity where you don't even have to think about equity.
Right.
Where you can make mid to high teens with tremendous upside.
Skylar, thanks so much for joining us. Really appreciate it. Skylar Winand, he's the CIO at Regan Capital Management in Dallas, Texas, with our news in New York City. Here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. It is no longer a search and rescue operation, but search and recover. After yesterday's collapse of the Francis Scott Key Bridge near Baltimore, Maryland, a road crew was working on the bridge at the time of the collapse. 2 were rescued, but 6 remain unaccounted for. The area remains closed off to traffic, which means a major artery around the city of Baltimore is blocked off. Baltimore Mayor Brandon Scott is asking people to be patient.
There are going to be detours. This is going to be a long road, but when we think about the realities of what those families are going through versus us having to spend a little bit more time in traffic, we can't even compare.
Baltimore Mayor Brandon Scott. In a state where Republicans control the governor's mansion and both houses of the state legislature, a Democrat has pulled off a win in Tuesday's special election in Alabama. Marilyn Lands made abortion and IV access a central part of her campaign for a seat in the Alabama State House. Her campaign ads took a jab at supporters of former President Trump.
MAGA extremists are devising new and cruel ways to further erode our most basic freedoms.
Democrats at the national level see Land's victory in yesterday's special election as a backlash against strict abortion statutes in GOP-dominated states like Alabama. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, Lisa.
And Michael Barr, thank you so much. We appreciate it. Alex Steele sitting in for Tom Keene. I'm Paul Sweeney here in our Bloomberg Interactive Broker studio. Looking at the futures here, Alex, it's kind of quiet here, but everybody's pretty much up about 0.4% on the day in the pre-market. The Dow up 169 points. We're on that 40,000 watch, 39,850. I like a nice round number. At NASDAQ, 18,528, up about 0.4%. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen. NASDAQ, Dow, and S&P futures all up about 0.4% right now. The 2-year yield at 4.59%. That is little change. The 10-year yield at 4.22%. And that is little change as well. To commodities, we have the dollar is weaker. Japanese yen stronger. In fact, the yen right now actually rebounding from a 34-year low. So just wanted to point that out. We have the euro, British pound weaker. Bitcoin right now at 70,241. Companies making news. We'll start with Visa. They're up about 0.2% right now, adding 3 new AI-powered fraud prevention tools to its lineup of products. This is for business clients to improve security. And then you have Robinhood. They're up about 5% right now, said it's rolling out a credit card to U.S. consumers. It's pushing beyond trading. And finally, Apollo, they're up about 0.5%. News that UBS Group agreed to sell $8 billion in unwanted assets to Apollo Global Management in a revised SPG deal. UBS ADRs, they're down about 0.3% right now. Those are your company stories we're following this hour. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Steele sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. So you go search Bloomberg Podcast. Tom Keene's not here, so let's just quickly quote Bitcoin if we can. We're up about 0.5% today, 70,240 on the Bitcoin. It's the spot ETF business. It's the fact that they're going to be making fewer Bitcoin going forward than they had in the past. So limited supply, presumably higher demand, pushing the price up. That's my knowledge of Bitcoin.
Tangentially,
Yes.
Sam Bankman-Fried's sentencing is tomorrow.
Oh.
I'm just saying, they're not necessarily related, but
Okay.
that's going to be super interesting, just in terms of what to fine and what prison term is
And
levied.
the government is looking for significant jail time.
Oh, yeah.
Yeah.
Yeah. I mean, wasn't Bernie Madoff was like 50 years, right? That was like the max. That was the biggest, I think. But
Maybe, yeah.
but a lot of white-collar crime is like 25 years. Some is 11. I mean,
Yep.
Anyway, that's going to
All
be
right,
interesting.
Bitcoin, 70,280. It's up about 0.6%.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
All right, your daily look at the front pages around the world is brought to you by IBKR Investment Advisors. Hey, investment advisors, switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. Lisa Mateo, the newspapers. What do you have for us today?
Well, we've been talking about the collision at the Baltimore Bridge. So I want to start here because apparently there's been some troubled history with that particular ship. So this is according to Vessel Finder. It was built in 2015, right? But it hit a stone wall berth at the port of Antwerp in Belgium in 2016. So it suffered some damage there, but it still remained afloat. It was repaired. The Washington Post says that ship, it was sold to Singapore-based Grace Ocean after the accident. But there's been different questions about mechanical, questions concerning it. Last June, it did a safety inspection and found issues that were related to some of the gauges that were linked to the ship's propulsion, which we know that was a factor in the crash as well. But it's still not clear what exactly those issues were. But it's still, because we're having all these questions about what actually caused, the collision at the bridge. So these are just some things that came up as far as the history of the ship. So some questions behind it.
Yeah, I wonder if I'm not a big seafarer person here, but I wonder if people are saying, like, are certain ships kind of cursed? I don't know if that's a thing, and if you're a mariner here. But
if you're superstitious or,
I guess,
Irish, maybe.
Exactly.
So there's that. But I also feel like not only maybe there's certain ships, but I think you could pick apart anything. Like you could go to any ship and you could find some stuff that could be improved, right? You could also ask the question, why did the bridge crumble so fast? Like I read a report that maybe the supports needed to be updated. They weren't as thick as they could be. So I think it's going to be one of those things.
And I did hear on the radio yesterday a report, the gentleman who designed the bridge saying the ship actually hit at the weakest point.
Right.
But that it did come down very, very quickly. So again, Kaylee Lyons for Bloomberg Television. She is in Baltimore. We'll have continued coverage from Kaylee throughout the morning.
All right. So the next one we have from the Wall Street Journal. NBC Universal's Peacock streaming service is going to be the exclusive platform for the NFL's opening week. It's a Friday game in Brazil featuring the Philadelphia Eagles. Now, this is the first game in South America, but the NFL also said that Amazon's Prime Video streaming service, they landed the rights for an exclusive streaming playoff game during the upcoming 2024-25 season. But the league is also scheduling a game on Christmas Day. So all this together, it brings up two things. It shows, yes, it shows at least. So it shows that the league leaning towards streaming to get that younger audience. So that's one route. And then the other route is that you have the Brazil game on Friday. You have the Christmas Day, which is actually on a Wednesday. So is the NFL moving away from the traditional Sunday game, which, everybody's always, used to, Sunday night football.
Alex is not buying this.
Guys, is this really the NBC story of the morning? Or is it Ronna McDaniel?
Oh, that's right. So is she out now?
She is out. That was a fast hire.
She's out.
Yeah.
That was a fast 4-day thing. I mean, that's great. Sports, they stream, they do stuff. Whatever, but Ronna McDaniel.
I know.
I also appreciate it, and I hope everyone's listening. Rich, this is for you. Is the New York Times led with, it shows the power of talent.
Yes. The talent spoke out about it.
We like this idea.
Yeah, the talent came out against her pretty
aggressively. And then
Very
the rhetoric, at least
aggressively.
in the Times, was like, hey, it just shows the power of the talent if you choose to see it. So, we choose to see it.
Yes.
Adventure travel.
I did like that. Oh, yes, adventure travel. Okay, so that's the next
Paul's
one.
not into this.
Definitely not. I know you like to sit on the beach with the cocktail.
Yep.
Adventure travel, not just for the young. Apparently, a lot more older folks. The ages have risen over the past few years. They're going on bike tours. We're talking about 5,600 miles, okay, on a bike tour. We're talking hiking the Appalachian Trail, surfing. Oh, you might like that one, Paul.
Maybe.
See? But the reason for this is because they're saying there's better gear. There's more accommodations, right? The 55-plus crowd, they've traveled more than their parents and grandparents have. So they've done the Rome, Paris. Now they want to go more extreme, and they have the time and the money. So those are the two things.
We're doing our new plan is in September of every year. We're going to do an international trip. So the first one is this September. We're going to Ireland, but it's a tour, and we're kind of doing the thing.
No biking,
hiking,
no?
thing. I mean, hiking to the pub in each town we go to is probably it. My son is on a surfing trip up and down the California coast for his spring break with the Outdoors Club at his university. So he's surfing all the big breaks in California, and hopefully he'll survive. But I'm not adventure travel, please.
You're not,
here's my adventure travel on the New York City subway. Twice a day. That's my adventure travel.
Actually, that's not at all inaccurate.
That's exactly right. So I mean, you're right. People are living longer.
Yes.
And we kind of thought, let's travel now while we can.
Well, you did the ski trip. That was a little dangerous.
Yeah, but that's everything. I've been doing skiing since ever. But we decided, we're gonna each September we're gonna do something.
But we're not going to be
But it's not adventure.
It's just a not sitting on the beach thing. It's just something different.
Right. But there better be a Four Seasons involved somewhere along the line.
It's so true. I think my next big trip will be a safari, but
that
would be nice.
But that's just with my kid because she loves animals so much. But I think she's to be a little bit older. But I think that will be what we're working for.
I love that.
What else you got for us?
Last
I'm
one
not sure
really
I like
quickly.
this story.
Yeah, this is a little kicker here.
And I say, where did Lisa get the story? The
New York Post.
I love this story.
Mike Tyson, we all know he's been selling edibles, right? But this one is going to be shaped like a chewed ear. So it's a callback, to Iron Mike's heavyweight showdown with Evander Holyfield. You can get them in New York, apparently. They're selling at certain places. They've already had Strain Stars over in Farmingdale, Housing Works in Greenwich Village, Grow Together in Brooklyn. Those are some of the places that already have them, but they're selling like hotcakes. People are ready for it. They're hyped up. He has that comeback fight against Jake Paul in July. So
wait, why do we not like this? This is brilliant marketing.
It is
brilliant marketing. You got to
is.
respect the marketing, even if you're not going to go eat an ear. They don't look that bad. I mean, they look like one of those like one. I don't know. I'm making like a circular thing, or like it's like a rope. It's like a gummy rope or something.
A gummy rope. Okay, like a lasso.
Yeah.
Exactly.
Okay. Yeah. Well. Yeah. But no, it's a great marketing pro.
Yeah.
I'm into it. Mike Tyson stays on the front pages all the time.
You gotta respect that.
He's always kind of in play there, either in movies or doing all kinds of crazy things.
Wait until that Jake Paul fight. He'll be back.
Well, when is that again?
July.
July.
And who is Jake Paul?
Big YouTuber. Big
YouTuber.
But he's young, right?
But he's young. He's like almost half his age, I would think.
And this is streaming on Netflix? Am I totally making that up?
No, I think you're right.
And this goes back to sports streaming.
Yes, because the Netflix sports streaming, yes.
Yeah, they do. Yeah, so we'll have to see. All right, so and it kind of goes back to your first story about, NBC Universal Peacock streaming the NFL. Everything's going streaming, kids, so you better get ready for that. S&P, we're looking at here a little bit of growth here in the market, a little bit of upside here, 0.4% on your S&P futures, on your Dow futures, on your NASDAQ futures, up about 0.4%. We're going to have more coming up. This is Bloomberg Surveillance. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, welcome back to Bloomberg Surveillance on Bloomberg Radio. Alex Steele sitting in for Tom Keene this morning. Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio. We're streaming live on that internet thing, I think you go over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. We're also on your dashboard, Apple CarPlay, Android Radio. There's no excuse for not listening and seeing Bloomberg Surveillance this morning. Coming up, we're going to check in with Marvin Lowe. He's State Street Senior Global Macro Strategist. He's in studio, which is a good thing. Seth Carpenter is also going to join us. He's a chief economist at Morgan Stanley. Get his thoughts on where this Federal Reserve is going. But right now, let's kick it all off. Bloomberg Business Flash release.
You got it. And right now, futures are advancing. We have NASDAQ, Dow, S&P futures all up about 0.3% right now. The 2-year yield at 4.58%. That is little change. And the 10-year yield at 4.22%. That is down about 1 basis point. We'll take it to the 30-year at 4.38%. And that is down about a basis point. A few companies making news. We have Merck. They're up about 4% right now. This is after its treatment for a rare form of high blood pressure. It won approval from the U.S. Food and Drug Administration. Then we take it over to Johnson & Johnson. They're up about 0.2%. This is after that Wall Street Journal report says that it's in talks to acquire medical device maker Shockwave Medical. And finally, I have to check back in with Trump Media and Technology Group. They're up about 14% right now. That stock rallied 16% in its first day of trading as a public company yesterday. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. Alex Steele, Paul Sweeney, we're live here with you in the Bloomberg Interactive broker studio. In Baltimore, Maryland, the search and rescue efforts are now search and recover. Let's get right down to Kaylee Lyons, Bloomberg television host. She is in Baltimore at the scene. Kaylee, what's kind of the expectation for how things will develop today? What's kind of the agenda down there in Baltimore on day 2?
Well, we're 2 hours now in, Paul, to this recovery operation that began at 6 a.m. Eastern time. So that effort is, of course, actively underway. Meantime, there are a number of officials that are here on site. I just saw the governor of Maryland, Wes Moore. We may hear from him shortly with a development or news of what has developed over the last several hours and what is likely to develop further today. There are also officials here from the FBI as well as the NTSB. I actually spoke with an official from the NTSB who did tell me they will be boarding the vessel today with more investigators. There are 24 of them total. Some of them, he told me, did indeed board the vessel last night, presumably after the search and rescue mission was called off, because they yesterday were not boarding the vessel initially because they didn't want to disrupt that effort. But more of them will be going on board today to conduct the investigative work that will begin into the cause of this crash, what exactly happened. And then, of course, it will be an ongoing effort, not just today, but in the days, weeks, even months to come, to get the ship out of the harbor and get all of the debris cleared so that the port of Baltimore can reopen.
Allianz Commercial released some figures showing that there were almost 2,000 incidences over the past decade involving ships colliding with port infrastructure. Okay. The idea is like this does happen. Yep. Just to the extreme to which this happened. What about all the data, say, on the vessel and the ship? Do we get the feeling they're starting to mine through some of that?
Well, that is what the NTSB will be doing once they board. We did hear from the NTSB chair, Jennifer Hominy, yesterday, who gave a press conference who was talking about specifically the recorders, which could hold a lot of data that will be crucial into the investigation to uncover what exactly happened on board the ship prior to it actually losing power, losing propulsion, and then, of course, crashing into the support pillar. So that data and some of the technology on board will be critical, but there will also be interviews that they will conduct, including with those who were on the vessel, the pilot of the vessel, which of course had to be specific to this harbor per Maryland law, and then of course the owner-operator factor here as well. There are many moving parts to this. Obviously, it will be a multi-pronged part of the investigation, and that is why there are 24 individuals who will be involved in that NTSB team at this point, looking at the data of what happened. But of course, it's not just about what happened yesterday, but everything that will be happening moving forward, and just how long it will take, not just to conduct the investigation, but to get everything cleared out, and then of course not just to reopen the port, but to reconstruct the bridge as well, which will be a lengthy and likely very expensive effort.
All right, Kaylee Lyons, thank you so much for joining us here with continued reporting from the scene in Baltimore, Maryland. Kaylee Lyons, Bloomberg Television, again on the scene. And there may be some remarks, some comments, perhaps a press conference from some of the officials down there in Baltimore this morning. If so, we will bring that to you, of course. Kaylee Lyons in Baltimore. All right, let's switch gears, get back to these markets. Just looking at the S&P 500 up and the Dow and the NASDAQ all up about 0.3 to 0.4%. A little bit of green on the screen, a little bit of a lift here on the screen. Joining us here in our Bloomberg Interactive Broker Studios, Marvin Lowe. He's a senior strategist, global macro for this little shop up in Baltimore known as State Street, which was a go-to meeting for me when I was a sell-side analyst. Had to go to the good folks, Larry Haverty at State Street and all the good folks there. Marvin, I guess the Federal Reserve over the last week or so and other central banks have kind of said, yeah, we're mindful of inflation out there, but we still think we can cut rates. Is that kind of your view here as we look forward?
Yeah, for sure. I mean, the signaling couldn't have been stronger. Everyone's lining up to begin in June, and that's a fairly aggressive, dovish impulse for the market to absorb.
So I mentioned this in the last hour, but Bloomberg Economics talked about the bridge and the Fed and inflation. And their hypothesis is that not that necessarily if the bridge is closed for a while it will affect inflation, but that in terms of auto disinflation, that will slow, and that could actually push back the timing of a Fed cut. I guess the question is, do you agree, and does it matter?
You know what? It ultimately doesn't matter because it will be temporary, but it does make data at a very important part of the process a little bit harder to analyze. Goods disinflation has been so important for this inflation story over, let's say the last 4 months, where the end of last year it drove a lot of the optimism, and then all of a sudden when we got less goods disinflation in January and February, all of a sudden everyone's worried about inflation again. So, we've got access to some online indicators around inflation, and they're showing a little bit more of a little bit more perkiness as we go even into March, into the beginning of April.
So, given that background, again, inflation's still there, although it's come down significantly from its peaks. We all know that. What do we do in the fixed income space here? I mean, I don't know. I can just go buy a 2-year Treasury at 4.6% and go kick back and maybe go skiing here, get some spring skiing in here. What do I do here in the fixed income space?
Yeah, for sure. I continue to like the shorter end of the curve, exactly based on the reason that that you mentioned. You could lock in those yields if that's within your time horizon. We want to go skiing for a lot more than 2 years though, so we got to figure out what to do a little bit further out the curve. Kind of locking in some of the yields, particularly in the corporate space, has been a very attractive trade. Spreads are tight, that makes a challenge, but if you're just clipping those coupons, you could lock in those yields for a 5 to 7 year period. And let's hope we're still skiing after that too.
So that's a yield play, not a price appreciation play or anything like that.
It is. It definitely is more of a total return type of environment. If you're a fund manager and you're managing to benchmarks and you're trying to look for spread compression, that becomes a bit harder.
So for me, I think we've talked about this, that I had money sitting in a money market fund. I'm the kind of gal that'll have... I'm the kind of gal that would have like gold and soup cans under her bed. Just to suffice it to say, I'm very risk averse.
Right.
And I'm wondering like what I do with that money market fund and that money under the bed. Like, do I just keep it there? Does that belong to somewhere else? And I sort of feel like we don't know yet. We thought it was a stock thing. Maybe not.
It depends on how much money you've got under the mattress. For sure, it shouldn't all be there.
All of it.
Some of it. I still like the short end of the curve. I haven't extended that much because higher for longer means that we're probably going to be able to collect, a decent money market rate, potentially into the end of this year, which is what a lot of experts did not expect. Yeah. Kind of having said that, you do have to get into some of the riskier parts of the curve. Things are expensive, but I still think that there's tailwind for those risk assets.
We look at the fixed income space in 2023. That kind of surprised me that the best performing fixed income market was a high yield. Double-digit gains in the high yield market last year, and with all the talk of recession, I was surprised that high yield did so well. What do you think about taking some of that type of credit risk these days?
You know what? High yield is expensive, for sure. Okay. It is a credit market. So, if you're comfortable picking those credits within the double B space, the default rates around that type of environment are not overly penal, but you have to pick those credits. Overall, if you're kind of buying the broader index, be aware that there still is risk that lurks with this inverted yield curve and a higher for longer kind of Fed as we go into next year.
Okay, so if I take some of that money out of the money market fund and I don't want to put it in the 2-year, but I want to put it in the equity market, am I putting it in NVIDIA, or am I putting it in energy, or am I putting it in utilities?
When do you need it? That's the first question. I do like.
I don't know, 40,
She's
50
young.
years
Yeah,
when I
she's young.
retire.
There
yeah,
you go.
60 years.
Then you're continuing to buy the U.S. Equity markets, and I've always liked growth. I've always felt that U.S. investors, the demand for growth globally is something that puts U.S. investors in a good position.
All right, Marvin, thank you so much for joining us. Marvin Lowe, he's a senior strategist, global macro for State Street, but he is a New York guy through and through. Undergrad at NYU, MBA at NYU. Still the best, I think, college T-shirt is just the faded NYU in purple. That is classic.
Is it?
Yeah, it's great. Go down to the bookstore down on wherever it is downtown, and
is it West
Astor Place?
Astor
And
Place.
Then you find
Do
it.
like me some Master Place.
Yeah. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. Federal investigator crews have reportedly found the voyage data recorder of the ship that crashed into Baltimore's Francis Scott Key Bridge. That's according to CBS. Meanwhile, Maryland's governor says that Tuesday's collapse of the bridge is likely to have national supply chain implications. 6 construction workers who were on the bridge when it fell are now presumed dead. Officials say there's no way they could have survived. However, Maryland Governor Wes Moore says lives were saved by quick-thinking first responders who reacted to the ship's mayday call before it veered into one of the bridge's pillars.
Those first responders, those law enforcement officials, those people who move quickly, it literally changed the entire dynamic of what that night could have been.
Governor Moore spoke to ABC this morning. Lawyers for hip-hop mogul Sean Diddy Combs call Monday's raids on 2 of Combs' properties an excessive show of force and hostility. Agents with the Department of Homeland Security searched houses owned by Combs in Florida and California in reportedly an investigation into alleged sex trafficking. Thailand's lower house has passed a bill to legalize same-sex marriage. The bill now goes to the Senate. Independent presidential candidate Robert F. Kennedy Jr. announced a Silicon Valley philanthropist as his running mate.
The next vice president of the United States, my fellow lawyer, a brilliant scientist, technologist, a fierce warrior mom, Nicole Shanahan.
Shanahan reportedly funded Kennedy's Super Bowl ad, telling the New York Times she donated $4 million to the group that ran the TV commercial. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, Lisa.
Michael Barr, thank you so much. We appreciate it. All right, Alex, WTI crude oil, $81 a barrel. Everybody in Houston's happy, right? With $81?
Yes. Except if you get demand destruction. So JP Morgan had a note out today, and it's not their base case, but they say they could see a case for $100 a barrel oil in September. They do see gasoline prices at $4 come May because of Russia actually taking some supply offline, which they hadn't necessarily been expecting. So I don't know, Paul, get ready. Get ready to
gasoline
complain.
prices, I'm looking at it right here. It's the Paul Sweeney personal inflation gauge. Daily national average gasoline prices, regular unleaded, which Matt Miller does not use. He only uses the high test stuff for all his fancy cars. I go regular unleaded. $3.53. That's up from about $3.08 back in the year end. So we'll keep an eye on that. This is Bloomberg.
Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Lisa Mateo. We have NASDAQ, Dow, S&P futures all up about 0.3% right now. Over to the bond market, the 2-year yield at 4.58%. That's down about 1 basis point. And the 10-year yield at 4.21%. That's down about 1 basis point as well. Over to spot gold, it's higher at $2,186 an ounce. And as far as oil, we have NYMEX crude at $81 a barrel, Brent crude at $86 a barrel. Over to earnings, fashion retailer H&M, their ADRs up more than 1%. Net profits beat forecasts as sales started to pick up for them. And GameStop, they're having a rough day, down 17%, reporting adjusted earnings per share net sales for the fourth quarter that missed estimates. And then this news stood out to me on the housing front. The latest rental report from Realtor.com, it says renting now less expensive than buying a starter home in all of the nation's major metros when you look at that monthly cost, about 60% cheaper on average nationwide. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Steele sitting in for Tom Keene here. I'm Paul Sweeney. We're live on our Bloomberg Interactive Broker Studio, streaming live on the YouTube things. So head over to youtube.com and search Bloomberg Podcast. Our next guest earned his PhD in economics from Princeton University, so I'm dying to ask him what his favorite sandwich is at Hoagie Haven, which is my favorite sandwich place on the planet. But we'll stay with some more serious stuff. Seth Carpenter, he's the chief economist at Morgan Stanley. Before going on the street, he spent 15 years at the Federal Reserve. So that's where I'm going to start. Seth, what is your Federal Reserve going to do, and when are they going to do it?
That is a great question, and it's a question everyone is asking. Our baseline call is that they cut in June and that they do a total of 4 cuts this year. So that would be a little bit more total over the course of the year than what the market's pricing and a little bit more than what the Fed put in their dot plot. We feel really pretty good, though, about that call. June in particular, it doesn't seem like Chair Powell shied away from that despite the slight upward revision to inflation forecast that the Fed had. We do think inflation's slowing. We think there's some moderate slowing in the real economy, and so we think they'll get comfortable in June to be able to notch things down.
So your call for 4 is an inflation call, not a growth rolls over, we're all freaking out call.
Correct. In fact, I will say, going back to the beginning of this cycle, when it seemed like just about everyone was saying the U.S. is going to go into recession, it's going to be a hard landing, there's no way you can get inflation down without the unemployment rate going to 6.5%. We were sort of steadfast in our call that the U.S. economy would not go into recession and that inflation can come down anyway.
So then, but to that point, what if inflation just stops coming down? Like, what if the disinflation scenario stops? Like, inflation doesn't go up, it just kind of stays where we are. I'm going back to that Bloomberg Economics article that talked about what happened in Baltimore, and that potentially that would stop the disinflation in, say, car prices. What happens in that scenario?
No, I think that's a tricky scenario. I think the most likely case in that scenario, though, is that the Fed, cuts rates in June, but then doesn't get to do anywhere near as much cutting as we think, as much cutting as the market thinks. And under that scenario, right, rates would sell off. You'd see a further tightening of financial conditions, and that fact would lead to more slowing in the economy to get some downward pressure on inflation.
All right, Seth, we're going to have to leave it there for some breaking news. Seth Carpenter, chief economist at Morgan Stanley, thanks so much. Right now, we're going to go down to Baltimore, Maryland. Wes Moore, the governor of the state of Maryland, is speaking. Let's go there.
From philanthropists, from people who are just asking how can they help. And so Maryland, we really appreciate the love that's been coming from around the country and the support. And I tell them the people who need it most are these families.
Governor, what's the top priority going forward? The recovery is now underway. But what is the top priority now that you're kind of shifting more into the investigation?
Yeah, well, the top priority for me right now is still the recovery. We've got to bring these families closure. I promise these families that I would instruct every single asset that we have to focus on that search and rescue, air, land, and sea assets to focus on search and rescue. Now that we've transitioned to the recovery phase, my promise to them is this: I will devote every single resource to making sure that you receive closure. And that has to be important.
Have you ruled out the possibility that there could be criminal charges for the shipping company or the individual who was driving that ship on Monday evening?
It's still too early in the investigation to rule anything in or out. But we know that the investigation, wherever it leads, that we will follow wherever the investigation leads.
Are you finding anything surprising? The ship has been in a collision before.
Anything surprising about?
Is there anything surprising so far about the investigation so far? For instance, like, a pattern perhaps of accidents?
No, I don't think there's anything surprising about the investigation thus far. And the investigation is still young, and so there's a lot that we still have to figure out. But the thing that we know is wherever the investigation leads, that we will follow, and we will make sure there's true accountability around it.
Governor, there's talk in Annapolis about making an emergency bill to make some funds available for families affected by the closure of the port. Any thoughts about that?
Well, it's important to me to make sure that these workers are protected. And that these workers are supported. The same thing is important to me to make sure that these families are supported in this time. We are going to be working with members of the General Assembly. We're going to be working with members of our federal delegation. But we have to ensure that we can both get our economy going, and knowing that for these workers, and when we're talking about a port that is responsible for over 140,000 jobs indirectly, are impacted by the Port of Baltimore. And so we have to both make sure that our workers are supported and getting this economy moving again.
Hey guys, thank you so much. That's all the time we have right now. Is it 6 workers, Governor, or are there more?
Oh, sorry.
Are there 6 workers, or are there more?
There's six workers that have been unaccounted for.
Thank you.
Thanks, guys.
Thank you, guys.
All right, that was Wes Moore, Governor of the state of Maryland. Given the latest here, it is very, very fluid situation there, Alex, and so, but just kind of ongoing. I think what we heard from the governor there is still very much focused on recovering the bodies of those folks that were on the bridge, and that kind of seems to be the focus, certainly of today and of the immediate future.
Yep, and sort of then what do you do from there? Apparently the audio recording will be key in Baltimore bridge probe, and I had mentioned earlier that Allianz Commercial released figures showing how there were almost 2,000, incidents over the past decade involving ships colliding with port infrastructure, like running into harbor walls, groundings, or damaging cranes. But of those incidences, only about 200 involved container ships. There weren't any data on bridge instances, but just the point that, this is a tough business. It's hard to do. When the power goes out, there's nothing you can do.
Yeah, and some people, I'm just kind of a fan of global shipping. I've said that before. One of my bucket list things is to take a voyage on one of these monstrous ships that have like the one that's been involved here down in Baltimore. These container stacked so highly, they're getting so big. And they're carrying so much freight, and some people are questioning whether they've kind of outgrown maybe some of the waterways around the world. Is it too difficult to navigate some of these huge ships in the existing ports around the world? That is, it's a concern. But the ships seem to be getting, bigger and bigger.
Oh yeah.
And the focus has really just been making them cleaner from a fuel perspective, and from a just kind of the eco perspective here. So, but again, this seems to be a situation where there was power failure on the ship that contributed to, loss of propulsion, loss of navigation, and so on and so forth. But of course, the investigation will bear that out over the coming days and weeks and probably months.
Yeah. And that's why the data is so important on that end. And so there's 2 questions for me going forward. One is the auto parts. So it's a roll-on, roll-off area, right? So where do the cars go? Can they be offloaded if they do go to, say, Virginia, New Jersey, or New York ports? If they can, and then there's a delay, how long is that line?
Yep.
And then what does that wind up doing to prices? So that's sort of one part that I'm looking at. And then the other is, can you substitute moving things in by train, by truck, and then does that drive up costs, or does freight costs just go up so much because there's going to be a shift in the supply chain globally, no matter what?
Right.
And what does that do to increase costs, and how transitory that is? That really feels key to where we go from here in terms of the Fed, in terms of pricing, and in terms of the economy.
Right. So we'll have to hear, presumably we'll hear the impacts there from some of the shipping companies, some of the railroad companies, the transportations, logistics companies, about how goods move in and around that part of the country. Kaylee Lyons, Bloomberg Television, she is on site in Baltimore. She was there at the press conference from the Maryland governor. We'll touch base with Kaylee in just a couple of minutes and get the latest reporting there. So, but again, it is a search and recovery operation at this point, as opposed to search and rescue. So that's where they are, the good folks down in Baltimore, trying to kind of move forward there. S&P 500 up 0.3%. Same for the Dow, same for the NASDAQ. We'll have more coming up. This is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Interactive Brokers Bond Marketplace. Access their vast selection of over 1 million global fixed income securities with no markups or built-in spreads and low transparent commissions. Learn more at ibkr.com/bonds. All right, to the markets we go, where futures are advancing. NASDAQ, Dow, and S&P futures all up about 0.3% right now. Over to the 2-year yield is at 4.59%. That is little changed. The 10-year yield at 4.22%, and that is little changed as well. Few companies making news. We'll start with Robinhood. They're up about 5%. Said it's rolling out a credit card to U.S. consumers. It's pushing beyond trading. Just a side note, we're having the CEO of Robinhood on Bloomberg Intelligence at 11 a.m., so be sure to set your alarm for that one. Over to Visa, up 0.2%, adding new AI-powered fraud prevention tools. It's going to be added to its lineup of products for business clients to help them improve security. And finally, Dell, they're up about 1% right now. The company revealed it had a steeper reduction in headcount than it had announced. Dell cut 13,000 employees over the last fiscal year. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Steele, she is sitting in for Tom Keene here today with me. Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast. Let's get back down to Baltimore, Maryland. Kaylee Lyons, Bloomberg Television host. She is on the ground there reporting. Kaylee, we just heard from the governor of Maryland, and it seems like his focus right now is on search and recovery of those 6 individuals. What can you tell us?
Yeah, that's right, Paul. I was just in a gag along with other members of the press with Governor Moore, and he was asked about his top priority today, and he did say it is recovery. He said he has made promises to the families of those workers who are presumed dead at this time, construction workers who were on the bridge when it collapsed. He said he has promised them closure, and so recovery really is where he is focusing his efforts today. And of course, those recovery efforts have been underway now for about 2.5 hours. They began at 6 a.m. Eastern this morning. Now, the governor was also asked about whether there could be any criminal charges for those who were in control of the Dolly, the vessel that, of course, crashed into the bridge, and the governor essentially said it's just too early in the investigation to know much at this time. He also spoke about emergency funding, talking about how he would be working towards that at the state level, but also at the federal level, together with the Maryland congressional delegation to secure requisite funding, talking about how he did want to economically support the thousands of Maryland workers who are dependent on the Port of Baltimore and its operations, keeping in mind that while recovery efforts are ongoing, the actual efforts to clear the debris out of the waterway to get this port up and running again have yet to begin.
So, Kaylee, do we know who's actually working on these recovery efforts? Is it state? Is it local? Is it federal? Who are the folks that are actually pursuing these efforts right now?
Well, the answer, frankly, Paul, is really all of the above. It is Maryland State Police that are really leading the recovery effort, but there are other partners. The Coast Guard, of course, was the one conducting the search and rescue operation that ended around 7:30 p.m. last night. They will still be involved, as with other state authorities, but really there are federal authorities as well. We learned from the Secretary of Transportation, Pete Buttigieg, yesterday that even the FAA was involved in making sure that the flight path was clear for any rescue or search operating vehicles to be able to do what they need to do. And the FBI is also here on scene together, of course, with the NTSB, the National Transportation Safety Board, which will be boarding the vessel today to conduct investigations, of course, into what exactly happened with this crash. So from state all the way up to federal jurisdiction, but as at work here. And of course, we know that the Biden administration has been paying close attention to what is happening, in communication with Governor Moore, and the president himself yesterday was talking about how the federal government will be footing the bill to reconstruct this bridge when the time comes to do so.
Yeah, Kaylee, that was my next question in terms of funding. How is it going to work? What has to be approved by Congress, et cetera?
Yeah, there could be emergency funding that is locked almost immediately. Of course, a state of emergency has been declared in Baltimore as well as in wider Maryland, so that could unlock some funds. Longer term, though, there is likely going to be supplemental funding that needs to be passed by Congress in order for the federal government to actually fund what could be a multi-billion-dollar effort to reconstruct the Key Bridge. We know that funding requests in Congress haven't had the smoothest time lately in actually getting through. A supplemental request the president previously made made in regard to allies like Ukraine and Israel still has not received a vote in the House of Representatives. The thinking, though, goes that for emergencies like this, usually Congress is able to get it together and get the funding across the finish line. Certainly the members of the Maryland congressional delegation I spoke with yesterday, both Senators Ben Cardin and Chris Van Hollen, did express confidence that Congress will get that funding passed. It's just a question of when. And then, of course, securing the money is one thing. Actually reconstructing the bridge is entirely a much larger effort.
Kaylee Lines, thank you so much for your reporting here. Kaylee Lines, Bloomberg Television host. She's on the scene in Baltimore, Maryland, and we appreciate her reporting. We're going to have reporting from Kaylee all morning here, giving us the latest on this fluid situations. Kaylee Lines in Baltimore. Let's switch gears. Let's get over to our good friends at Odd Lots, the podcast. Tracy Alloway, Joe Weisenthal from Bloomberg News joining us here in our Bloomberg Interactive Broker studio. Tracy, Joe, I know you guys you have a schedule. You're so busy with the podcast, the Odd Lots podcast. But I'm guessing you had to pivot a little bit here with some of the news coming out of Baltimore. How are you guys approaching that?
Yeah, we released an emergency episode. It's out right now, speaking with one of our favorite shipping guests, Sal Mercogliano. He actually has a shipping show on YouTube called What's Going On with Shipping.
Okay.
So really the perfect guy to speak to. And the first person, when I heard the news yesterday that I thought of, I immediately went to his Twitter account to see what he was saying. And he makes the point that we have this 50-year-old bridge, which when it was built, obviously adhered to all the codes of the day. But in the time since, container ships have become much, much bigger. What we ask of container ships in terms of turnaround times and flexibility and just intensity has grown enormously. And so now there's a mismatch, right, between this old infrastructure and the new ships. And the result is the terrible tragedy that we saw yesterday.
First of all, these are two of my favorite people at Bloomberg. Did you know this, Paul?
I did not know
Paul,
that.
you were obviously
They're
my
okay.
favorite.
Yeah, they're
But
on
then
there.
it's like a Joe and Tracy
All right.
situation.
Understood.
Particularly Tracy, Joe. No offense, but I haven't actually
That's
seen
fair.
Tracy
I
in
think
like
that's fair.
years.
Yeah, so this is a real treat.
This is like really exciting for me. I'm having a moment. So okay, aside from that, I'm wondering like how you fix that, Joe, because it's not like there's a lot of infrastructure money that's going to... We all know the bridges and roads and tolls need to be fixed, but then like getting the capital out there is a whole different story.
Yeah, I think there's like a couple elements here to thinking about spending priorities. So obviously the bridge is going to have to be replaced. It doesn't seem, and there's not... I don't think there's any way to do that quickly. As our guest mentioned, just designing a new bridge, assuming you want to make it taller, assuming you want to make it more fortified, that design does not currently exist, so that would have to happen. Then there's the federal money, and maybe the federal government will gather the votes to do it. The other thing, too, is, so for example, there's a good article on the Bloomberg this morning about this particular ship, some issues, historical issues that ship has had. As he pointed out, there really is not much budget right now for a lot of these sort of operations that would monitor this type of thing or that would enforce this type of thing. As he pointed out, I think the whole spending on, I forget which division he mentioned specifically, having, a smaller budget than like the New York Police Department for the entire globe of some of this tracking and stuff like that. So perhaps, one area is not necessarily in the physical infrastructure of the bridges, but another thing that could be done theoretically is in the sort of monitoring of the ships and the compliance and the upkeep and making sure that they're all technically sound.
All right, so Odd Lots, the podcast, real estate, commercial real estate, that is a big issue for investors in general, particularly real estate investors, particularly investors in the financial institutions that lend to the real estate business. You guys have a story on that. What do you have?
Yeah, we've done a couple episodes on this now. So we spoke with Rich Hill, formerly at Morgan Stanley and now at a different specialized shop. And we have another episode coming out on Thursday with Arpit Gupta. And he's the guy who kind of coined the idea of the urban doom loop. So his argument is that as property prices fall in value, the amount of tax that the state or the city can get out of the population starts to fall, and therefore the experience of being in the city starts to fall, and we all deal with increased crime and rats and nasty things like that. But I have to say, he seemed more optimistic when we spoke to him, and his whole urban doom loop idea was sort of predicated on the idea of the city doing absolutely nothing. And it came out like a year or so ago at this point. And I think since then we have seen some measures from the city to do things like office to residential real estate conversions and things like that. So it's all about what we can do to arrest that doom loop at this moment.
And part of the story, too, is that we might not know the final chapter yet because there are many things that take time, like property tax reassessments take time. There are companies occupying office space that haven't canceled their leases that may plan to. If you had like a 7-year or a 10-year lease, you're not getting your employees back at the office, then maybe at some point that... So there's still this element, it's like we don't really know. And the full budgetary impacts on the city... You know, it's sort of rough in New York, but as he points out, like in San Francisco, at normal growth rates of sort of new leasing, would take them 37 years to get back to normal levels of vacancy rates. So, like, it's much, you know, San Francisco's other things going for it, like everyone who knows about AI is going there, but, like, you know, there's some real issues with the sort of lagged effect as these assessments and leases roll off that we just don't know yet.
Wait, am I going to have to pay more property taxes?
Well, that's part of the doom loop scenario.
Yes, yeah?
Well, maybe. Again, there are all these different levers to pull. But the timing here is really interesting, and that's a theme that keeps coming up in all these episodes. So for now, commercial real estate investors have been able to buy time through extend and amend practices by not lowering the rent and having to crystallize those losses. But the big question is, how long can they keep doing that?
Yep, absolutely. This is a story that's going to play out over years, I think. All I know is I'm back every day. I'm in the office every day. I don't know what everybody else is doing. Tracy Alloway, Joe Weisenthal, Odd Lots podcast. You can check out, get it anywhere you get your podcasts. This is a really good one. It's been one of our most successful podcasts, and they get some great guests, and we appreciate getting a few minutes of their time with our news in New York City. Here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. It's a port at a standstill with the collapsed Francis Scott Key Bridge holding all ships from entering or leaving the port of Baltimore. Maryland's Governor Wes Moore told ABC that the incident is likely to have national supply chain implications.
This port imports more cars and vehicles than any other port in this country. We're talking about over 51 million tons of foreign cargo.
Governor Moore says 6 construction workers that were on the bridge are presumed dead. NTSB Chair Jennifer Hamady was asked about the speculation the ship that crashed into the bridge lost power.
We do have a download from the voyage data recorder that we've sent back to our lab to evaluate the data and begin to construct a timeline of events, which we hope to have later today.
NTSB Chair Jennifer Hamady spoke to CBS Mornings. An appeals court extended a pause on a Texas law that would let the state arrest and deport people who enter the country illegally. It gives the Biden administration a win in a fast-moving legal fight with sweeping implications for U.S. immigration policies. Finally, somebody in New Jersey's not going to work today.
Tonight's Mega Millions jackpot is an estimated annuitized $1.13 billion.
New Jersey is where the winning ticket for the Mega Millions jackpot was sold, breaking a winless streak that dated to last December. Full disclosure, it wasn't me. The numbers drawn last night, 7, 11, 22, 29, and 38, with that gold ball 4. Global news, 24 hours a day, and whenever you want it, with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, Lisa?
Yeah, I'm here, so I guess I didn't win.
Well, did you know? Did you check?
I'll have to check. I could be. I could just be, one of those.
It's true. You're like hiding it so no one claims.
So you're right. So I'm talking to my accountant, my my attorney, that kind of thing. Get my ducks in a row before I announce. That could be that scenario.
I don't think it's true, but I think it could be true for Lisa because she got really excited. You should have seen her face, guys.
I was like, New
for those
Jersey?
of you on radio, that when she heard Michael Barr say New Jersey, it was like Santa came and Christmas came. Did you check, Lisa?
No.
She's too busy. She's running around doing newscasts for stations all over the country.
Or maybe she doesn't want to be let down. She doesn't want to know that it hasn't happened for her.
Do you think she would come back into work if she'd won?
It'd be sad.
If she won, would she come to work,
I
or would
think
we
she'd
not
come
see
back
her?
for a couple weeks just to like round
Just
it
to
out.
make sure you were covered.
And then she'd be like later.
All right, very good. We'll see. If we don't see Lisa in the next coming days, we'll know. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures advancing after ending lower in Tuesday trading. S&P 500, though, having a pretty good run, set for its fifth month of straight gains. Still, a lot of the moves this week a little bit modest ahead of Friday's release of the Federal Reserve's preferred inflation gauge. Right now, we have NASDAQ, Dow, S&P futures all up about 0.4%. The yield on the 2-year at 4.58%. That's down about 1 basis point. The 10-year yield at 4.22%, and that's down about 1 basis point. The 30-year will take it there too at 4.38%, and that is little changed. Spot gold is higher at $2,186 an ounce, and over to oil we have NYMEX crude $81 a barrel, Brent crude at $86 a barrel. And then I have to point out Bitcoin, it is higher at $70,046. Companies making news. We'll start with Merck. They're up about 5%. It's treatment for a rare form of high blood pressure. It won approval from the U.S. Food and Drug Administration, so that's why those shares are higher. Johnson & Johnson, they're up 0.2%. And this is after a Wall Street Journal report that said it's in talks to acquire medical device maker Shockwave Medical. And then have to check back in with Trump Media and Technology Group. They were up about 18%. Those stocks rallied 16% in its first trading day as a public company yesterday. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate it. Alex Steele sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. You know what we need to talk to today? John Tucker, because we need he's our congestion reporter.
Wait.
Yes.
Did he win the lottery?
He's
not here, right?
He's a Jersey guy. He's not here. That's a very good point.
Just putting this out there.
We'll have to see. We'll have to put it out there. But the MTA board is expected to vote on congestion pricing tolling structure this morning. The meeting kicks off at 9 a.m., but there's an hour of public comment before the agenda items start. So we're probably looking at a 10 and 10:30 time frame where we might get something there. So we'll have to see how that plays out. But again, congestion pricing, huge issue for the folks here in New York. Also a huge issue for market investors is, what is this Federal Reserve going to do? I mean, we started the year thinking 6 rate cuts. If you look at WIRP Go, that's kind of what the market was discounting. Now we're kind of like 3 or 4. I don't know. But our next guest, he has an informed opinion. Rich Clarida, former vice chair at the Federal Reserve. Now he's got a paying job. He's a managing director at the New York office and PIMCO's global economic advisor. Rich, thanks so much for joining us here in studio.
Hey, Rich, good to see you.
Yeah. What is your Federal Reserve going to do, and when are they going to do it?
I've been doing other things for 2 years, so it's not my Fed anymore. I think they think they're done. I think they think the next move is a cut, and certainly in the recent press conference, the chair did not really try to push away the idea that they would start this summer. And so I think WIRP is more or less where I would be right now as well, 3 cuts. But I do think and hope that they are data dependent because the inflation data has been mixed at best. So I think it makes sense to start cutting now, but the pace and destination, I think, should depend on the inflation data, I hope.
I've been talking about this all morning, Rich. Great to see you, by the way.
Yeah.
In terms of the Baltimore bridge collapse. And I understand overall you can just go to a different port eventually. But in the short term, there could be an impact on disinflation for autos. And I'm wondering if we see disinflation stop for durable goods and good stuff, does that change the data, and does it change or push back a cut?
Great question. I think on that, the crisp answer would be no, for the simple reason that it's potentially a big shock to auto prices, although I think other folks think it could be attenuated. But I think the Fed would tend to, and that would be a good approach to look through that. So it shouldn't change the Fed's 1 or 3 year inflation picture materially about this tragedy in Baltimore, and I think they would look through that. If that's the only thing going on. The tricky thing, of course, is that goods disinflation is a big part of getting down to 2% eventually. It's been happening in the last couple of years. But they need to be looking at that more closely because there are other factors pushing up goods prices, including supply chains and all reshoring and onshoring and all that. So right now they've been getting a lot of help with goods disinflation, but they'll need to keep on top of that.
Rich, a lot of folks we talk to, whether they're academics or practitioners, they say inflation's already whipped. If you look at the real-time data, it's done. We're done. Why isn't the Federal Reserve not moving now? And perhaps it's because the Federal Reserve looks at data that's in the rearview mirror. How do you think about that argument? How do you kind of come back to that?
Well, I think that if the Fed were targeting the CPI inflation index, which is probably more well understood than the PCE, the CPI is running a point hotter now. It's somewhere in the high 3s, maybe low 4s. So we really wouldn't be talking about Fed rates cut if the Fed were targeting a different index. Also, I think the Fed will tend to look at the drivers of inflation, if you will, the trend in inflation. And a big part of that is labor cost. And wage inflation has come down, but it's still a little bit hot. So certainly if I were still at the Fed, which I'm not, I wouldn't be in the mission accomplished camp. I would be encouraged by the data we got in the second half of last year. And it's been very, very great, as Governor Waller was saying 2 years ago, that we've been able to disinflate without really any pain in the labor market. So, knock on wood that continues. But I don't think if you look at broader measures of inflation that we're there yet.
Why did the Fed miss the boat on inflation a few years ago, and when they miss the boat now?
Well, I was there, of course, then in 2001 and charter member of Team Transitory.
So you were Team Transitory.
Oh yeah.
And everyone hated that was the word, but yet that was true.
Well, it was in the FOMC statement, which I signed off on, so I guess I didn't hate it at the time. Look, initially in the spring and summer of 2021. Headline inflation was high, but it was not really broad-based. In fact, I remember at one point saying to one of my colleagues, I'm not prepared to raise rates because used car prices are up 40%. But by the second half of 2021, it didn't matter. Every inflation index was going up and was very broad-based. And so I think the transitory story had a confrontation with reality, and the Powell Fed pretty quickly, beginning in the fall of 2021, began to pivot to tighter policy. So Team Transitory was really in play, for maybe 6 or 9 months, but the Fed moved pretty quickly once the data changed.
And do you feel like the economy is in such a position now that, again, we had some inflation data over the last month or so that kind of suggested to some people that maybe inflation's not beaten down here. So does it suggest that the Fed can, in fact, wait here and just kind of let the long and variable lags play out?
I think that is certainly an option, and I think that is a message the chair was conveying at the press conference at the last meeting. They think their policy is restrictive, so one option, if you think policy is restrictive, is just to delay the cuts, and the longer you keep policy restrictive, the more the lags will tend to kick in. But they're also very cognizant of the fact that they're getting some good news on the supply side. Labor force participation's up, productivity growth is up, and appropriately, they don't want to lean against that. So if more people are working and they're more productive, you don't want to try to lean against that.
Rich, what would be a word that you would use to describe inflation now? Like if it was, because to some extent, transitory wasn't wrong. Like for goods prices, it was transitory. Just the time frame of transitory was challenging. What's the word you would use?
I don't know if I have a word. I'd say we're on the right path, but there is a risk that the progress could stall. Maybe on the next time I can condense that to one word.
Okay, I'm going to think about that too. Risky, nerve-wracking.
Sticky and stubborn is a possibility.
All right, Rich, you got some advanced degrees at some place in Cambridge, Massachusetts, but the bottom line is you're University of Illinois Illini.
And proud
Sweet
of it.
16.
And proud of it.
How do you feel about your Sweet 16 Illini
Well,
here?
I looked it up. It's been a long time since my Illini made the Sweet 16. In fact, it was 20 years ago, which in itself is pretty sad. You got to root for them. I think when they did make it to the Final Four, they played a North Carolina team that was better. So, hope springs eternal. I graduated in 1979, so it's been a long time since the Illini have been the center of attention in basketball.
But you'll be rooting them on against, I guess, Iowa State this time, right?
Oh, yeah.
All right, good stuff. All right, Richard Clowder, thank you so much for joining us. Richard Clowder, former vice chair of the Federal Reserve. He's also a managing director in the New York office of PIMCO. But of course, the most important thing on the CV is he's a graduate of the University of Illinois, the Illini in the Sweet 16.
Is this what I'm going to have to do now? Like to prep for surveillance in the morning? I'm going to have to like read about sports.
You're going to have to do
forget the market, whatever, it's sports
You're
stuff.
going to have to peruse ESPN for just like 30 seconds on the way.
Okay. All right. I'll effort that tomorrow.
Effort that
and then we'll see how that goes.
See how that goes. All right.
Basketball?
Well, Tom, it's like hockey. I mean, nobody cares about a hockey boomer, but yes, exactly that.
Oh, I get it. That's
S&P 500 up 0.4%. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
right, coming up in this hour, we're going to get the latest reporting from Kaylee Lyons. She's down in Baltimore. And we're going to check in with Brendan Murray. He's a trade czar with Bloomberg News. Get the thoughts on kind of where we are in the supply chain and the impacts from a shutdown of the, at least temporarily, of the Baltimore port. Dave Brazzano, Poland Capital's head of credit, he's going to give us his thoughts on kind of what we're doing there in the credit markets, corporate bonds, how much risk do we want to take there. And then Matt Winkler, editor-in-chief emeritus, founder of Bloomberg News, is going to join us and talk to us about the great state of Michigan. The economy's doing pretty well there. So all that's coming up this hour. Right now, Bloomberg Surveillance is brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing. Call an Oppenheimer professional today. Let's kick everything off with Lisa Mateo. Lisa, what do you have?
You got it right now. We'll start with futures, and they are advancing. NASDAQ futures now up 0.5%. We have Dow and S&P futures up about 0.4%. Over to the 2-year yield at 4.58%. That's down about a basis point. The 10-year yield at 4.22%, and that's down about a basis point as well. We have spot gold higher at $2,184 an ounce, and over to oil, NYMEX crude $81 a barrel, Brent crude at $86 a barrel. This news coming across the Bloomberg right now. Fisker cutting the prices of its Ocean electric SUV by as much as 39%. Fisker has been a lot in the news, that EV maker, so we'll definitely keep you on top of that. GameStop, they're down 17%, on track for the biggest decline in 9 months. That's after its revenue fell. And finally, Robinhood, they're up about 7%. They say they're rolling out a credit card to U.S. consumers. It's pushing beyond trading. Stay tuned, because we're going to ask the CEO all about it later this morning, 11 a.m. Wall Street time right here. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Steele sitting in for Tom Keene. He's on assignment up in Canada. He'll be back mañana, I believe. That's not French for tomorrow, but you get my drift.
No,
so.
you get me tomorrow. You still have me tomorrow.
Oh, do I?
You do.
Nice.
Yeah.
All right, so he's got a travel day, Tom. Maybe the Leafs are playing. We're in our Bloomberg Interactive Broker studio here today. We're streaming on YouTube as well, so you can head over to that internet thing, youtube.com, and search Bloomberg Podcast. We're also in your dashboard, Apple CarPlay, Android Radio. No excuse for not getting us through all that technology. All right, let's head back down to Baltimore, Maryland. Kaylee Lyons, Bloomberg Television host, is there with the latest reporting. And Kaylee, I guess the message today is search and rescue has now evolved into search and recover. That seems to be the focus today. What are you hearing?
Absolutely. We just heard from Maryland Governor Wes Moore, who was gaggling with reporters. He was asked what his priority is today, and he said recovery, that he has met with families of these 6 individuals that are still unaccounted for, construction workers who were on the bridge at the time of its collapse, and he has promised them closure, and he really wants to be able to deliver that to them. So recovery efforts have been underway now for several hours. This is kind of a treacherous situation for those that are trying to recover the bodies of these 6 individuals. We are talking about water where visibility is low, quite choppy. It is a cloudy, dreary day here in Baltimore. There's going to be rain on and off, so that makes water conditions already difficult, and that's coupled with the knowledge that there is serious debris in the water. We're talking about steel, parts of this bridge that are collapsed, of course, and have been submerged, parts of shipping containers potentially as well. All of that in the water that these first responders are dealing with at this time. So this is an effort that could take some time, keeping in mind that workers were not working on this overnight because it makes the conditions all that more dangerous. So they're going to be working throughout the day today in this recovery effort. And after that point, after this recovery effort is over, is when we'll be talking more about clearing the debris and actually reconstructing the bridge and, of course, getting the Port of Baltimore back open.
Kaylee, talk about the investigation into the ship and how they will do that.
It'll be led by the NTSB, the National Transportation Safety Board. We heard from the chair, Jennifer Hominy, who was here on the scene yesterday. She will be leading a team of 24 investigators from multiple different divisions within the NTSB, from maritime to others, to look thoroughly into what exactly happened on the Dolly in the moments leading up to, and of course, ultimately culminating in the collision. We know that there had a power loss, propulsion, the ability to control the vessel, did issue a mayday before colliding with the bridge. That did enable first responders to close off further traffic from coming onto the bridge, ultimately probably saved many lives. But they are going to be looking into everything that was happening on that ship, which was being piloted by someone local to here, as is stated, is mandatory in Maryland law. But they will be conducting interviews, likely looking at data on recorders on the ship, also talking to their counterparts in Singapore, because of course this vessel was Singapore flagged. It was owned by a Singapore-based company, operated by another. So there's many different entities at work here. The NTSB will be looking into all of that, and they will really be leading the investigation moving forward.
All right, Kaylee, thank you so much for your ongoing reporting this morning from Baltimore at the scene of the collapse of the bridge. That is Kaylee Lyons, Bloomberg Television host with On the Scenes reporting. We'll have Kaylee's reporting throughout the morning. We appreciate that. Let's get to the potential economic impact. I'm just looking at some Bloomberg News reporting here. As much as 2.5 million tons of coal, hundreds of cars made by Ford Motor Company and General Motors, and lumber and gypsum, all threatened by the disruption after the container ship Dolly slammed into and brought down Baltimore's Francis Scott Key Bridge in the early hours of Tuesday. So we're just starting to get a sense of the types of commerce that went through that port. Brendan Murray joins us. He's a trade czar with Bloomberg News. Brendan, I guess we're all just kind of learning here as we go kind of what the economic activity is in and around Baltimore and the Baltimore port there. What are some of the ongoing issues there?
Yeah, so they aren't the kinds of products that we deal with every day. Like you said, gypsum is and construction materials. This is stuff that kind of comes in on a large bulk ship. Is transferred to a train or a truck, and then it's on a construction site, where your new home was being built. So it's not something that goes through Walmart. So a lot of that cargo now has to find somewhere else to go, somewhere else to enter the U.S. or be exported. I'm seeing on the Bloomberg terminal today that ships that had registered Baltimore as their next port of call are just going to New York. They're going to Virginia. They're going to Savannah, Georgia, Brunswick, Georgia. So the great diversion from Baltimore is underway. Those ports tell us that they do have extra capacity to handle this. But the problems will be, we'll have to see if problems develop on land where, you're expecting your container or your load of lumber to come through Baltimore. You've now got to arrange trucking or railroad to bring it to you from 700 miles away. So that's where we could see some of the bottlenecks.
It feels like two areas that are most at risk, as Paul was just mentioning, is coal, which definitely hurts India. Coal exports, a majority of that coming from the city of Baltimore, is going to India. And then the other is auto parts, and that could maybe not see higher prices, but maybe just stop the disinflation trend that we're seeing. Can you drill a little bit into those two areas?
So the experts that I've talked to say, that this is really going to be a regional issue. That that there are that ports in other parts of the country will absorb some of this shock. But if you need to bring something from much farther away, the trucking company or the railroad's going to charge you for that. So in the near term there could be some modest increases in things, surcharges added to your transportation bill, but it shouldn't be very lasting as the logistics industry kind of works through these disruptions.
So I'm probably like a lot of people, Brendan, and I'm just learning a lot about what kind of goes through the port of Baltimore, although I did just recently watch The Wire 20 years after it debuted, and they had a big focus on the port of Baltimore, so I learned something there. But automobiles, it's a lot of import automobiles come into Baltimore. Can other ports, whether it's Norfolk or New York, New Jersey, can they handle that type of product?
Not necessarily, but some of them are specifically geared to handle large amounts of auto imports and exports. You need, somebody was describing it to me recently that, there's a team of people that run on the ships, start driving each car off individually. They jump in a van, they go back on the ship, and so it's kind of a labor-intensive process. And then you need a lot of parking space until they can be trucked out and or put on trains. So it's an infrastructure-heavy industry, the automobile transport sector, that you can't just replicated anywhere. I think Brunswick, Georgia, is another big auto gateway. So they be looking at Brunswick now to see if they can absorb some of this.
All right, Brendan, thank you so much for joining us. Brendan Murray, trade czar for Bloomberg News, and helping us understand a little bit some of the trade implications of this bridge collapse in Baltimore. We appreciate his reporting there. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. 6 people are still unaccounted for after yesterday's bridge collapse in Baltimore. A cargo ship rammed into a support pillar to the bridge. The Transportation Secretary, Pete Buttigieg, telling ABC's Good Morning America that the bridge could not withstand the intensity of the large ship's impact.
I can't weigh in or speculate on anything related to the investigation. What I do know is that the force of this ship is almost unimaginable. This is a vessel that was about 100,000 tons carrying its load, so 200 million pounds went into this bridge.
Secretary Buttigieg. Meanwhile, Maryland Governor Wes Moore reiterated the importance of the Baltimore port to the U.S. economy.
It's a huge economic impact for the country. This is not just impacting Maryland. This is impacting that farmer in Kentucky. It's impacting that auto dealer in Michigan. And so it is imperative that we get this bridge rebuilt. It's imperative that we get the Port of Baltimore back up and going. And it's not just about how are we supporting Maryland. This is about how we're supporting the American economy.
Maryland Governor Wes Moore also says they will have a full investigation for what caused both the power outage and the lack of steering ability on the cargo ship. Lawmakers in Thailand's lower house of parliament have overwhelmingly approved a marriage equality bill that would make the country the first in Southeast Asia to legalize equal rights for marriage partners of any gender. It would open up access to full legal, financial, and medical rights for LGBTQ couples. The bill now heads to the upper house Senate. Finally, if you want to make Lisa smile, the winning Mega Millions lottery ticket for more than $1.1 billion was sold in New Jersey. The winning numbers that you think, no, Bar, you're lying. What are the numbers? 7, 11, 22, 29, and 38. Mega number 4.
Lisa, yes, huh?
No,
what?
well,
Do you know? Did you check? What's happening?
I texted my husband, who is the buyer of the tickets, because I don't believe in him. I think it's a waste of money. But he said he didn't buy it.
Oh, no.
Gotta be in it to win it.
I'm out of the running.
And again, has anyone talked to John Tucker?
No, we haven't.
No.
So
Okay.
I'm just going to assume he won.
There has been a sighting, though.
You mean Cousin John?
Cousin
John.
Exactly.
Why is he
long
Cousin
lost
John?
cousin? Because family.
give him
now
some
he's
money.
just-
I got you. Okay, I see. I got you. Well, I'm assuming he'd give us all a little bit of something,
sure,
right?
a little
I mean,
something,
he's
sort
that
of.
kind of guy.
Yeah.
Maybe he gets some chocolates. Anyway, he's
right,
in the
very
building.
good.
Therefore, he did not make those bazillions.
All right, Michael Barr, thank you so much. We appreciate that. Looking at the markets here, we got about 17 minutes before the markets open. We got everything's up about 0.5%, 0.4 of 1%. So a little bit of green on the screen here. Yields, 10-year Treasury off about a little bit, just off 4.22% on your 10-year Treasury. Tom's not here, so let's call out Bitcoin.
Does he forbid you from like?
No, but
Bitcoin?
I kind of get the stink eye sometimes when I
No,
quote
that's fair.
Bitcoin. It's up 2%, 71,250. We'll have more coming up. This is Bloomberg Surveillance. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are in the green. We have NASDAQ futures up about 0.5%. Dow and S&P futures, they're up about 0.4% right now. The yield on the 2-year at 4.58%. That is little changed. The 10-year yield at 4.22%, and that is little changed as well. To currencies, the yen bounced back from a 34-year low. This is on speculation Japanese officials may be preparing to intervene to support the currency. And I want to head to Bitcoin right now. It is higher at 71,380. Want to go back to our headline? We get more details in it. We're talking about struggling EV maker Fisker slashing the price of its Ocean SUV by $24,000. That's nearly 40%. The company's been warning it may have to file for bankruptcy. It's been delisted from the New York Stock Exchange as well, so a lot of issues there. And we'll head over to Apollo. They're up about 0.5% right now. News that UBS Group agreed to sell $8 billion in unwanted assets to Apollo Global Management in a revised SPG deal. UBS ADRs are down about 0.3%. That is your Bloomberg Business Flash. Paul and Alex.
Hi, Lisa Mateo. Thank you so much. We appreciate that. Alex Steele sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. Early in my career, Alex, I was at the Chase Manhattan Bank at the Media Group, and we lent money to media companies, telecom companies. No assets, no inventory. We lend against cash flow. Cash flow is what pays you back. And sometimes we even lent to the cellular telephone industry. So we would go to our credit committee and we would say, they have no assets. In fact, they have no revenue. They have no cash flow. But what they have is air. And we think the air is valuable. We want to lend against that. And they thought we were crazy. But we got the deals done. We made a ton of money doing it.
That is a crazy pitch, actually.
That is a crazy pitch. Think about Fleet Call back in the day, which is now, so they had airwaves. But we got the money. And we made a lot of money doing those kinds of deals. Now it's all in the private credit business. That's where the fun is. David Brizano joins us. He's head of the credit team at Poland Capital. I think I like this private credit business. I think I'd be quite good at it. Talk to us about private credit. That seems like an asset class that really has just kind of ballooned over the last 10 years or so. How do you guys think about that?
Yes. Well, first, thanks for having me. I do want to point out that private credit has been around for centuries, so that's what the original credit markets
But I
were.
never lost a deal to private credit. Now the banks are losing deals to private credit.
Absolutely, and it's sort of a function of the changes that occurred in the market largely after 2008 and the crisis then, where banks, for many reasons, pulled back from direct lending and became more originators. And also the growth in the traditional high-yield bond market and then the leveraged loan market fueled by the growth in CLOs. So you've seen a disintermediation of traditional banks and the old days insurance company lenders. But now with the explosion in popularity of private debt and vehicles set up to access this market, you've seen an opportunity for other investors, pension plans and institutional investors, to go into those funds, but also individuals now have an opportunity. And there's just a tremendous amount of money flowing into the direct lending private debt market, which now affords companies another option to borrow money. They have, they could go to the public bond market, they could go to the leveraged loan market. Now, larger companies that have access to public markets can go to the private debt market and determine where they can get the best terms, and then they access it. Where we see an opportunity, though, is in the traditional space of private debt, the middle and small cap market companies that really didn't have an opportunity to go to the public debt markets. And with this explosion in popularity and funds moving up market to these billion-dollar deals, we see a little bit of a void of availability of capital for those smaller companies.
What are covenants like in that area? Like, who has the power, you or them?
It ebbs and flows. So when there's a lot of money flowing into the market looking for deals, it becomes a borrower's market where they have the leverage to be covenant light and get better terms. In the middle and small cap space, we still see the ability to have stronger covenants and a yield premium because of that illiquidity. So we see attractive opportunities. Now, not all deals are the same. There will be deals that get done that people will look back and grimace at, but by and large, in the larger private debt deals, the attractiveness of private credit is dissipating a bit. The deals are competing with the public markets, and the borrower will look at the options that they have. They can go to the public bond market, the leveraged loan market, or private debt. Whichever market offers the best terms for them is what they'll access. And by definition, that means that the private debt market in these large deals is less attractive than it would have been if it didn't have that competition from the public markets.
So how are you guys is it Poland Capital?
Poland Capital.
How are you guys at Poland Capital kind of seeing opportunities there in with those three options?
So we're looking more at the smaller deals again, where we see a little bit of a vacuum of capital because the market's moving up market, if you will. So we still see some good opportunities there. We always have to be selective. And what we've done is we've beefed up our origination because that's a valuable capability. Is we've got to see as many deals as we can so we can ferret through and pick the better ones. So we've beefed up origination, and we're going to really pick through the middle and small cap space where we still think there are really nice opportunities there to get a yield premium per unit of credit risk.
Are there individual sectors that are more interesting, or is just we're interested in these sort of market cap companies for reasons because we don't want to go to the big guys because everyone else is going to the big guys?
Yeah, I mean, we have our sector biases, and I'm sure other asset managers have theirs as well, and that's only appropriate. It's what makes markets. I mean, essentially what we're looking for is, at the end of the day, we've got to be confident that the company can pay us back. So we want to avoid...
That feels like a really good base.
Yes.
Yeah.
At the end of the day, you got to get paid back or it's not really worth it. So we look to avoid secularly challenged companies where the industry is being challenged in some fashion and eroding, where there are certain credit risks that are difficult to quantify. We like to say oil and gas companies, where the success of the company is dependent on the price of a commodity that's very difficult to predict. So it doesn't really lend itself to high leverage. It should be more equity financed, if you will, to better match that risk. And then companies where we find difficulty to get transparency into how they're truly performing. It could be certain types of finance companies where you just don't have access to the underlying loans that are in their portfolio to get that level of confidence. So we're looking for predictable cash flow. We do, your earlier comments, we do like cash flow. That's the best way to service debt.
Yep.
You can have assets, but if you can't get cash from those assets, you could have a temporary problem.
Yeah, we tried to explain that to a certain casino operator in 1992 from Atlantic City. Didn't quite get that concept that cash pays us back, not your reputation. 30 seconds here. Should there be regulation of the private credit business?
I mean, I'm not a huge fan of over-regulation. I think the regulation should focus on appropriate disclosures and valuations and things like that so that the investor isn't naively allocating money to a fund for false reasons. So I think it's more on integrity and honesty of the information that the manager is providing its investors.
Very good. David Brizano, thank you so much for joining us. David Brizano, he's head of the credit team at Poland Capital Management. Cornell University, got the MBA there. A big fan of the Johnson School. Mike Anderson's on the board. He's a friend of mine, former colleague, on the board with you. And then also you're on the board of Union College. So you're active at your alma maters. Good stuff there. Like to see that. David Brizano, head of credit team at Poland Capital. Looking at the markets here, we're 5 minutes to get this thing open. We're kind of lifting about 0.5% here for the S&P 500, the Dow, and the NASDAQ. So I've seen a little bit of green on the screen. 10-year Treasury, about 4.21% there. WTI crude oil, calling that out for Alex Deal. She always has that. So number one thing on her screen. Sure. WTI crude, $81 a barrel. Feels a little higher. I got gasoline. It's going to cost me like $3.50 to fill up on the Jersey Shore. It's a little higher than I'm expecting. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Paul Sweeney, Alex Steele with your opening bell report. Now, we had some moves this week on Wall Street. They've been a little bit modest. It's ahead of Friday's release of the Fed's preferred inflation gauge. The S&P 500 actually having a pretty good run. It's set for its fifth month of straight gains. The question is, how will the markets open today after closing lower yesterday? Here we go. Let's get to the open. We'll get to the S&P 500. We'll start there. They're up about 0.5% right now. The Dow is up about 0.6%, and the NASDAQ kicking in. There it goes, up about 0.6% right now. Over to the bond market, the 2-year yield at 4.58%. That's down about a basis point. The 10-year yield at 4.22%, and that's down about a basis point as well. We have spot gold higher at $2,186 an ounce, and over to oil, NYMEX crude is $81 a barrel. Brent crude at $86 a barrel. At the open, I want to check in with Trump Media and Technology Group. Yesterday at this time, it was up well over 50%. This morning right now, we have shares up about 21%, and the stock rallied 16%. Its first day of trading as a public company yesterday. And finally, Carnival Cruise Lines, they are down about 4% right now. Reported adjusted EBITDA for the first quarter beat estimates, but it's also seeing a $10 million impact from the Baltimore bridge collapse. We'll have more on that. That is your Bloomberg opening bell report. Paul and Alex.
All right, very good. Lisa Mateo, thank you so much for that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Let's head that back down to Baltimore, Maryland. Kaylee Lyons, Bloomberg television host, is reporting live from the scene of the bridge collapse yesterday. Kaylee, it feels like, I guess what we heard from the governor earlier today is this is a search and recover mode. That's where the efforts are. That's where the focus is today. Any updates?
We're 3 hours plus into this now, Paul, and it's still just a recovery effort. To this point, those 6 individuals who are still unaccounted for still have not been accounted for and are presumed dead and have been since last night around 7:30 p.m. Eastern time when the Coast Guard called off the search operation, keeping in mind that we were talking about cold waters here that they plunged into at 1:30 a.m. yesterday. It has been some time now since this bridge collapsed, but recovering these individuals' bodies and providing closure to their families is what Maryland Governor Wes Moore said is his top priority today. Secondary priorities, of course, will be the investigation into the crash, what exactly happened with the dolly before it collided with the bridge, then clearing the bridge debris, the ship, everything to try to get the port of Baltimore reopened, keeping in mind that this is a vital conduit specifically for the import and export of autos as well as the export of coal. And then it will be a long-term reconstruction effort that is going to be costly and is likely to take some time. And I would just reiterate again that to this point, officials have been very reluctant to give firm time estimates for any of this.
And you spoke with Senator Cardin yesterday. There was a gaggle of all the top officials, really. President Biden also said the government is doing this. We are going to pay for it all. Well, how are those conversations evolving?
Well, President Biden did make that commitment yesterday. He said he intends for the federal government to pay entirely for the reconstruction of this bridge. And we did hear in the press gaggle that Governor Moore conducted earlier this morning that he does intend for the state government to be working together federally with the Maryland congressional delegation, for example, to secure the funds necessary, not just for the reconstruction of the bridge, but the economic support that workers that are dependent on this port may need. There's over 100,000 of them that have to be considered in this equation. So it is going to be a few baskets of funding. We're talking about state emergency funds, federal emergency relief funds potentially. There could be some infrastructure money that was already slated to go to Maryland from legislation that already passed that could be in the mix here. And then, of course, likely a supplemental request that the president will have to make to Congress for the billions of dollars it could take to reconstruct this bridge. And congressional approval would be required. Both Senator Cardin and the other Democratic senator from Maryland, Senator Chris Van Hollen, told me yesterday they are confident that congressional approval will come, but Congress is in recess right now, so we aren't likely to see that immediately.
So, Kaylee, I'm just looking at my Google Maps for the Baltimore area, and I see obviously the bridge closed down on Google Maps, but I also see some congestion points at the other river crossings there, the harbor crossings. What are we hearing from local officials about kind of how the city's dealing with the traffic?
Yeah, well, there have been warnings, including from the police department today, to consider your commute time because you obviously can no longer take I-695 as a vital part of that is now underwater. It is essentially a road to nowhere that is behind me here. So other routes, I-95, 895, for example, are what drivers are going to have to use, keeping in mind that we are talking tens of thousands of people, roughly 35,000 cars every single day passed over this bridge. And that's just in thinking about commuter traffic. There also is actual freight and distribution to consider. Commercial vehicles. The Trucking Association has said about 4,900 commercial trucks cross this bridge every day, collectively representing about $28 billion of goods annually that needed to move over this bridge. They are now going to have to go the long way around as well. And for any trucks that are containing hazardous material, they aren't actually allowed to go in the tunnels underneath Baltimore Harbor. So we're talking about tens of miles added to those journeys as they can't use the tunnels. It's just a lot of gridlock and snarling that is likely to result from this. And frankly, there is no end in sight for that because the reconstruction of this bridge will be the longest term project of everything we're talking about.
Yeah, and then just wait till the kids come back and the kids got to go to school.
That's right.
And and people come back from the vacation. That's going to be a complete nightmare.
Yep. All right, Kaylee, thanks so much for joining us. Kaylee Lyons on the ground reporting from Baltimore, Maryland. We appreciate that, getting her reports all this morning from Baltimore. All right, let's switch gears, get to the fixed income business. When I was at Credit Suisse, we bought this little investment bank called Donaldson, Lufkin, and Jenrette. Some really, really smart people there. Did we lock them up? No. They walked out the door the next day. What a complete waste it was there. But some smart people there, including Brian Whalen. He's the co-CIO and generalist portfolio manager at TCW in the fixed income group. Brian, sorry about that with the whole Credit Suisse DLJ effort. My bad. Brian, talk to us about the fixed income space. I've got central bankers around the world really over the last week to 10 days kind of staying with this dovish call here, despite some maybe sticky inflation. How are you guys positioning your portfolios over there at TCW?
Yeah, I think in that respect, in terms of the signaling that more likely than not, the most global central banks are going to start cutting in the middle of the year. I think we're in line with that. I think we view the early moves of inflation that spooked the market a little bit as just noise on a further deflationary trend. Historically, the first couple months of the year often exceed expectations. A lot of the things we buy and the services we pay for tend to spike when they reset early in the year, and then they come down back toward trend. And that seems to be what we heard from the Fed.
Is there anyone you haven't worked with in the world, Paul? I mean, I love this. Like every
it's
intro, it's like, so I worked with this guy, I worked at that firm.
It's a lack of loyalty back in the day. That's kind of how we rolled.
I think it's awesome. It's great. It's like decades of Wall Street. I'm curious, Brian. Well, yeah. I'm curious, Brian, when you're taking a look at opportunities and we take a look at money market funds and with the $6 trillion in money market funds, do you think that belongs to other areas of fixed income, or does it belong somewhere else? Or how do you see that glob of money?
I think that glob of money is finally starting to earn something. I mean, you can earn 5% plus or minus even, in the short end of the curve, whether it be money market. So it's a great place finally to kind of park your money and earn something instead of actually having the kind of a negative real return on that. But it's also, I think, an opportunity. I think a lot of money, in the bond market in particular was spooked from 2002, when we had literally like the worst return year in bonds ever. And I think people have shied away, but now we've started to see in 2023 and even 2024, we've seen stability in the rate markets. And we're starting to see that in fund flows. We're starting to see money come back into bonds. I think it'll come both from money markets, which you've identified, but also from the equity markets. A lot of institutional investors and retail investors, they want to rebalance. And we had a 25% year plus or minus in equities last year. Equities are up about 10% plus or minus this year. And that should continue to see good, healthy rebalancing flows that goes back into bonds. And throughout the course of the year, we're expecting to see interest rates come back down as that money floods back into, a pretty good return opportunity in bonds.
Well, in that scenario, Brian, when you sit down with your portfolio managers at TCW, how much credit risk are you guys thinking about here? Do I go into the high yield market? How much, if I do, how far down do I go in the high yield market?
We think it's the other side of that trade. There's a lot of optimism. It's the whole melt up FOMO type of conversation. Spreads right now, investment grade high yield spreads are, let's say it this way, they typically are only more expensive about 5% of the time. Super rich, basically. So this whole no landing, soft landing scenario, whether that comes to pass, what I would tell you is that it's embedded. That scenario is embedded into market pricing, and then, which means the flip side, the things that maybe things don't go exactly as market expects, whether that be the Fed or whether that be inflation or whether that be the economy, you're really not getting paid for the risk that these possible other scenarios might play out.
Do you think that if you just go from credit to the overall fixed income market with treasuries, are you of the steepener camp? And if you are, sort of how long do you hang in there?
Yeah, well, we are in the steepener camp. We talk about duration and overweights and duration and where we like to kind of allocate our dollars. It's in the front end of the curve. And what we're saying by doing that is that, yes, we believe in the steepener. Curves cannot stay inverted indefinitely. You can't borrow more than you invest in terms of the rate of return. And eventually that will correct itself. The cost of that, as you're implying, is that you have to roll up the curve. And that hits you from a price perspective. So it's expensive to be in that steepener if it takes years and years to play out. However, if you're correct, and let's just say whether it's inflation that comes down a little more rapidly than the market expects, or this economy slows down quicker or more violently than the market expects, the Fed will react. Right. They'll cut more aggressively than it's in pricing. And then that's when that steepener pays off. That's when it's best to be in the front of the curve, which is exactly where we are.
All right, Brian, thank you so much for joining us. As always, Brian Whalen, he's a co-CIO, and he's a generalist portfolio manager at TCW Fixed Income Group out there in Los Angeles. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex, Lisa, federal investigators are now on the scene of the bridge collapse in Baltimore, trying to discover more details about what happened. 6 construction workers on the bridge when the collision occurred remain unaccounted for and are presumed dead. A cargo ship rammed into a support pillar to the bridge. Transportation Secretary Pete Buttigieg says that while the impact of the ship into the bridge was too great, his agency is focusing on how to make other existing bridges stronger.
As times have changed, as bridge designs have been modernized, each generation of bridges is more resilient than the last. One of the reasons why we put such a focus on roads and bridges in President Biden's infrastructure plan is to make sure that we have the strongest possible infrastructure.
Secretary Buttigieg spoke to ABC's Good Morning America. Independent presidential candidate Robert F. Kennedy Jr. announced a Silicon Valley philanthropist as his running mate.
The next vice president of the United States, my fellow lawyer, a brilliant scientist, technologist, a fierce warrior mom, Nicole Shanahan.
Shanahan reportedly funded Kennedy's Super Bowl ad, telling the New York Times she donated $4 million to the group that ran the TV commercial. An appeals court extended a pause on a Texas law that would let the state arrest and deport people who enter the country illegally. It gives the Biden administration a win in a fast-moving legal fight with sweeping implications for U.S. immigration policies. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, Lisa.
Can we talk about Carnival for a second?
Yes.
So that stock is down 2.8%. It reported earnings before the bell. Now, broad strokes, the numbers weren't terrible. They did beat estimates. But here's an interesting statement that they had, that they see a potential $10 million impact on their full-year adjusted EBITDA and net revenue on the Baltimore Bridge collapse.
Really?
Yes, because they have a port there.
They have a port there.
So
okay.
yeah, I'm sure like that they can go other places, but like then
Yep.
people have to get to the other places, etc.
But my takeaway was their business is booming.
Kind of booming.
I mean, they're kind of booked throughout the year. I mean,
Best year on record.
Yes, and we've heard that from, I guess, most of the cruise operators here. People are still traveling, particularly on the cruises. Charlie Pellet comes to mind as one of those cruising folks.
You're a cruiser
considering
now.
it. I'm considering it for 2025.
I thought you booked it.
No, we haven't booked yet, but
Okay.
that's definitely kind of what we're thinking for our 2025 Euro travels, kind of a cruise. So we'll see, but people are out there. The cruisers, they are a loyal bunch, to say the least. S&P 500 up 0.5%. This is Bloomberg.
Now a look at some local headlines making news in the tri-state area.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, we have stocks in the green. The S&P 500 up about 0.5%, the Dow up about 0.7%, the Nasdaq up about 0.3%. The 2-year yield at 4.58%, that's little changed. The 10-year yield at 4.22%, and that is little changed as well. Over to spot gold, it's higher at $2,188 an ounce. And as far as oil, NYMEX crude $81 a barrel. We have Brent crude at $86 a barrel. Over to currencies, we have the dollar stronger, Japanese yen stronger, euro, British pound weaker. Bitcoin at 69,986. What's moving the markets? GameStop right now, it is down 14%, on track for the biggest decline in 9 months after its revenue fell. Then we go over to Robinhood. It's up about 4% right now. It said it's rolling out a credit card to U.S. customers as it pushes beyond trading. And finally, struggling EV maker, we have Fisker. They are up about 7%. They're slashing the price of its Ocean SUV by $24,000. That's nearly 40%. The company has put out that warning that it may have to file for bankruptcy too, so we'll follow that. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate it. Alex Steele sitting in admirably for Tom Keene. Reports are that he will be back tomorrow if he negotiates, getting the border crossing and all that.
That's tough.
There could be some
That's
issues
tough.
there, but we'll see. But
for a
Tom
second,
Keene,
I thought I got fired. I was like, oh my God, what? I'm not on tomorrow? But apparently he's back.
He's
so
back.
all is
Okay,
well.
very good. I guess he saw his Maple Leafs last night, so it's all good with Tom up in Canada. But anyway, we're here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. It is an election year. That means we focus on some of those swing states. And Michigan is certainly one of those swing states, the Great Lakes state. Pretty good economic rebound in that state. With the data, with the story, is Matthew Winkler. He is the founder of Bloomberg News. He is the editor-in-chief emeritus as well, and he joins us here. Matthew, talk to us about Michigan. What's happening to the economy of the great state of Michigan?
Well, Michigan's outlook, as you know, is especially relevant. By the way, great to be with you. Because Americans are persistently reminded by the media that so much depends on these 7 so-called swing states, Arizona, Georgia, Michigan, Nevada, North Carolina, Pennsylvania, and Wisconsin. Michigan, population of 10 million people. It's the 10th largest state. And it's had a complete rebound from what was, if you like, the 4 years under former President Trump. The economy especially is strong because of the employment outlook, which is very significant. Michigan is completely caught up practically to the rest of the country. And it's the job growth, 5% job growth, that is making the outlook particularly beneficial. Mm-hmm. We know, by the way, that Michigan is doing well because there happened to be a series of indexes called the Bank of Philadelphia, Federal Reserve Bank of Philadelphia coincident indexes. And these metrics track each state based on non-farm payroll, that's jobs, average hours worked in manufacturing by production workers. That's very important, as we all know, historically for Michigan, and the unemployment rate, and most significantly, wage and salary disbursements deflated by the consumer price index. So if you're worried about inflation, which every poll story says Americans are, when you use the Philly Fed indexes, you see that the standard of living in Michigan today is significantly greater than it was when Trump was president. And why is this important? Because the polls will all tell you that people are unhappy, and they're unhappy in many cases because of inflation. But if you look at, as I said, this data, which is very precise and very closely followed, it tells you that things are going pretty well.
So that's such an interesting point, because on the one hand, there are the facts and the data, and then there's still the sentiment. How do we explain this gap?
Well, actually, Pew did it for us. Pew did a very detailed poll, and the very people who said the economy isn't so great, when they were asked individually, how are you doing? They said, I'm doing great. So you can't have it both ways. You can't have people saying, I'm doing fine, but everybody else is doing lousy when everybody else is polled is saying, I'm doing fine too. And that's from the poll that Pew did recently last year.
Hey, Matt, when I think of Michigan, like a lot of people, I guess I probably think the auto industry. Talk to us about the auto industry in Michigan today versus, I don't know, in years past. How important is it? And because that kind of goes to this whole evolution of the auto industry to electric.
Sure. There used to be a saying, as General Motors goes, so goes the nation, long time ago. But in fact, General Motors is still a very important part of the Michigan economy, and you did say auto industry. And if you just look at the share price of Michigan's GM, if you like, GM on the terminal, you'll see that it's been appreciating and had a very good ride. And that's kind of a very good indicator of how things look. But there are lots of other ways to look at corporate Michigan. My colleague Shinpei and I decided to take a look at 3 companies that increasingly represent this diversified economy that is Michigan: American Axle and Manufacturing Holdings, UFP Industries, and UWM Holdings. One is an auto parts maker, the other is a wood products manufacturer, and the third is a mortgage finance company, happens to be, I think, the 3rd largest in the world. They're all performing very well, but most importantly, they're all hiring. Every one of those companies has increased its workforce significantly over the past couple of years. And their outlook, if you read the statements by their CEOs and their chief financial officers, is, as we speak right now, very, very bullish. So that gives you some sense of where corporate Michigan is.
Do you think that the gap between that sentiment that we talked about and then the facts and what corporate Michigan is talking about, does that kind of close as we get nearer to the election?
Well, interestingly enough, there was a Bloomberg poll just yesterday that I'm sure you folks reported widely, because poll stories, after all, seem to be the fanatical obsession of the media. And that poll showed that actually Michigan now, Biden's leading Trump, or it's too close to call, whereas before Trump was leading Biden. So I would say yes. The wonderful thing about the truth is you never have to change your story, and the economic facts have been true and they're continuing. And so at some point, people will, in their sentiment, actually acknowledge that things are pretty good and getting better.
How about on the inflation front, Matt? Because that's obviously a big issue for voters in general, consumers in general.
Well, inflation peaked at 9.2% based on the CPI in June 22, and it's now down to about 3-something%, or maybe even less than that, depending on which indicator you look at. And the Federal Reserve in particular has said that their expectation, and you can see that in the $26 trillion U.S. bond market, that the expectation is that inflation will continue to trend lower. So that's the outlook. What it does say is that expectations for inflation are relatively subdued. By the way, we know that also because on the Bloomberg, now using artificial intelligence and document search, we can see that CEOs are mentioning inflation as an issue far less than they did just a year ago. Right. And it's across the board. So if inflation was a concern, Alex, you would see it and hear it from the most important people who drive American business. And they're not talking about it anymore the way they used to.
All right, Matt, thank you so much for joining us. Matt Winkler, of course, he's the editor-in-chief emeritus of Bloomberg News. He is the founder of Bloomberg News. You can check out his opinion column today on the Bloomberg terminal. You can go OPIN GO, or you can go to Bloomberg.com/opinion. That's where you'll find all the good opinion work from the good folks at Bloomberg Opinion. Some smart comments, smart commentary there. Matt writing today about the great state of Michigan, one of those swing states, economy doing quite well there is what the data is showing. So we'll have to, and he's following up on some of those swing states.
Yeah, and I appreciate the idea that it's not just as Detroit goes, as the state goes. So I appreciate that there is a distinction. I just don't know if we can underestimate the fear and dislike of EV policy among traditional automakers. And I don't know how you kind of solve for that at the end of the day.
No, I don't. It'll be interesting to see how this EV market does evolve, because, again, there seems to be a soft spot here. And is it because of the cost of these vehicles, the lack of charging, widespread charging? Are there other issues at bay? But that's something that the global auto industry has to figure out. Looking at the market here, the S&P is up 0.5%, NASDAQ up about 0.1%. This is Bloomberg.